Good morning, traders. Welcome to the Traders Lab. I'm Tom B., streaming live Monday through Friday, 11:30 a.m. to 1 p. Eastern Standard Time. This stream is about integrating Bookmap order flow tools with auction market theory and volume profile in the intraday developing time frame. It's not a trade calling room. It is specifically for educational purposes only, and how you might integrate a understanding of how the market works, why it tends to do some of the things it does, and how you might get better aligned with it in executing your trade plan or developing your current trade plan. General disclosure: all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Let's keep an eye right here at the test of the initial balance low. These are not trade recommendations. We are here to observe market behavior. This is the first hour low. It is an area of low volume. The market has the potential to come up in this area and check it and then potentially continue. This is our target down below. And again, these are not trade recommendations. We are just here to observe market behavior. Stops are typically sitting over the initial balance. So this area in here, which is poorly traded, has the potential to get taken. So we want to observe. And again, these are not trade recommendations. Let's think about retail trader behavior. Their stops are right above the IB high. Low. Sorry. So let's just see how this behaves. So we are looking for a potential continuation lower. Stops are sitting right at this level, right above the IB. This would be the target down below, and these are not trade recommendations. What you'll see is we had stops go off right here, but there are still stops sitting in here. So this area is potentially vulnerable for stop pick or squeeze, and then we have to observe. So, subject to your trade plan, this may be an opportunity to observe a short, not a recommendation. So no audio on YouTube, is that correct? Is YouTube good? Okay, sorry guys. All right. Amazing. Sorry about that, YouTubers. I had to smack the side of the computer. You know how that works, right? Everybody ever have a... So this is a observation that we discuss in the Trader Lab, and that's called an IB continuation. Sorry you guys missed that. Move up into the low volume area, stops, exhaustion, chop, chop, high volume area. This becomes your over under for this. So we want it to stay below this, which is an auction here. If it comes out above, then that would be a reason to have a cocktail. Otherwise, 70 is the potential target below. Not a trade recommendation, we're just observing behavior. And as we know, every outcome of every trade is random. We're above that high volume node. That suggests that this trade is going to go south of the border, and we just have to kind of see how it behaves. There's 30 stops going off, but this trade looks like it's on its way to the happy hunting ground. So let's see. Key location right here. These are not trade recommendations. We are observing market behavior. So this rotation we just put in here, we don't want to take it out. If we do, then we're going to squeeze further. That looked like a stop pick. So the high volume sitting up here now is still your reference. We're still at this outside edge. We do not want it up in here again. Come back up. It is time to go for lunch. Not me, but you know what I mean. Quite often what happens is the trade gets put on, and if you look at this, our high was here. All we did was come up one ticket. So if we can't get anywhere from here, then that was just a stop grab, break, pull back. Stop would be above here. Then your job is to get a scale and hold for 70 if that's part of your plan, not a trade recommendation. So we'll see how this thing does. So stop pick, potential short, scale, stop goes above here if that is your trade plan. The worst that can happen in this is scratch. 70 is the target. We come back above here, then that one is done. That's about it. So we'll observe it. So if it comes up above here, it's done. So chop chop, stop pick, break, trigger, pull back to the high volume, which is this. So any short under here, stop is above here. Then the distance from entry, at least this is something we discussed in the Trader Lab. So it's a 2-lock configuration, not a recommendation. Of course, you have to vet any ideas. Stop would be above here. It's funded. That's a job of the first contract. And then 70 is the target. So there's no risk if you're following that plan, and that's something we discuss in the Trader Lab. And again, past performance is not necessarily indicative of future results because the outcome of any trade is random, and who knows. So basically, you take your trade. If that is your trade, part of your trade plan, you hope to get risk neutral, and then see if and try to give the trade the room to work. If you're all in, all out, you may find that emotionally you're going to be jumping in and out and be triggered by your emotional states, which is why we use a 2-lock configuration in the Trader Lab, so you can calm yourself and try to dampen down your emotional volatility. So the trade fails, that's life in the fast lane. Any questions? Are you guys still able to hear me? Okay, so you guys we have something called the IB continuation trade. Is that correct? Are you guys tracking? Okay, any questions? Now, YouTube, by the way, you guys, you're in a 15-second delay. So, just be conscious of that. If you have any questions, post them. I'll do my best to answer in a timely fashion. Low of the day, 75 quarter currently. 69.70-ish is the target on this trade. When we evaluate these trades, obviously there's a couple elements. First one is getting risk neutral. So you can basically fund your stop on the second contract and then attempting to stay in the trade as long as it doesn't violate the structure, then this is the target in here. 69, so 70. Leave some for the sweeper. And again, not a trade recommendation. We're just observing the behavior. Is everybody with me? Where did they add the liquidity? 36.95. That's pretty far up there. I don't think that's the immediate influence right now. I mean, we've got this sitting over here at the low of the day. And they've added down here. So they want to trade here, and this is a strike also. So depending on, your plan, I look at strike prices only because I anticipate potential hedging behavior in there. But it is just a matter of the number of contracts you trade, And in the Trader Lab, we primarily discuss a two-lot. Because the goal of the Trader Lab is to help traders develop trading plans in a stable, consistent approach, a disciplined approach to trading. This morning was really choppy and difficult. It was hard for me. I was up, down, up, down, up, down, and currently I'm trying to recover because I just dug myself down a bit after, go up, go down, go up, go down, because I wasn't getting the follow through. So I was long early, then I got short, then I got long, then, because the market was kind of doing this. And at first, if you guys who used the profile, we got into yesterday's value area, which put the 70 was the target early on. I'm trying to remember if I was long or short early. Can't remember even. I think it was long and then got short. So, because we traded outside of yesterday's value, then when we came back in, it puts this, on the target. But then we were ripping around, and it just got really ugly. And sometimes that's just the nature of trading. If it was choppy, and I was trying to trade distributions, which is another conversation. These are distributions, basically, this kind of thing. What this is consolidation. So if you look over here, chop, 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 that's your consolidation when you break out of it. And if you guys follow the stream, you know that I look at these. A consolidation is an auction in a microstructure. And what it is too low, too high, too low, too high, break. So what that says is the high volume in here, which is like a retail price, was too high. We had the same scenario here. Chop, chop, chop. This is like your convenience store Saturday night, the pint of ice cream. There's buyers and sellers, and there's retail, but it's not your supermarket. It is like the corner store. They do less volume and there's less buying and selling, but it's still an auction. And that's what this tells you, too high. Then we come back into this. Hold on one second. We come back into this area, pick the stops. This is called the IB continuation trade. If you guys are interested in this, there's about 60 PDFs you can download in the Trader Lab, and also a video that I did that kind of shows a lot of this, the behaviors. And you'll find in the market there are certain behaviors, and I think some of us call them setups, but I won't call them that, that tend to have some kind of statistical probability of one thing happening over the other. These are called structured trades. So it's like a bus. You wait at the bus stop. You wait for the location area. Remember, it's not mechanical, it is behavioral. And then you want to see certain things to trigger. And then the trade goes on with a target based on structure. And then your goal is to get risk neutral, right? So this was your short area. Scale, so risk neutral. Stop goes above this. especially because they took the cheap shot and one took this consolidate. I think it was this one of these. And once the cheap shot's over, that gives it more potential to go lower. Just a little tidbit. And again, past performance not indicative of future results. So you can see the liquidity here. Let me try to open this up so you can kind of see this a little bit. So this is showing me 313 came in the book here. Now, so you understand some of what happens with this. Some of this is to cause a reaction so they can get short. And the way you can tell this is we behave off it. Now they pulled. Okay. There's another target achieved. Next target is down at 69.70-ish.
Stop ES sell 207.
This is a structured trade, guys. Can you understand why this is a structured trade? Any questions on why this and this area here might be your target? Rash, I look at the liquidity that's added closer to the market in the polls. And the thing with liquidity, you really don't know the purpose of it. So if I see liquidity pushing here and I want to see these guys pulling, that opens the door. And you can see a little front running in here. Though, remember what liquidity is. It's the limit order book. So these are all limit buys right in here. Now, whether they really want to buy, don't know. You know, that's always the real question. So for me, my next target, and these are not recommendations, is right ahead of here. You know, in other words, this is the actual target, but, you know, so there's another target, not a recommendation. So that's another area to observe. Now our next target is down in here. And these are not trade recommendations, you know. But if you're interested in finding out more about these structured ideas, I invite you all to come to the Trader Lab. You can go to bookmap.com and you'll see join the Discord chat and then come to the Trader Lab. There's 60 PDFs you can download plus video on all these on market mechanics. In other words, auction market theory, how the market works, why it tends to do what it does. You know, what it will do is always, as we say, a mystery because it's random. And in trading, it's really just about trying to exploit probabilities of one thing happening over the other, and we don't know what that distribution of outcomes will be, you know. So, I mean, for me, I've been short today, I've been long today, I've been standing on my head today, and I'm just trying to stay in alignment. And there are times, and today is one of those days where I feel like I'm turning a tanker around, you know, because for me, when the context changes, it you know, it takes me a, you know, then I have to kind of reconfigure. I mean, I change my trade plan a little bit to try to get in alignment. So, you know, and that's just the nature of trading, you know. It's just a matter of not one trade, it's a sequence of trades over, you know, a sample size. And one of the things we talk about in the Trader Lab is the trade plan. So there's the target. Right here. Are you guys tracking?
Yes. Anomalous event.
Okay. So this is called the IB continuation. If you guys are interested in finding out more about these things, why? Remember, auction market theory. Why? Do you know why? If you don't know why, I invite you to come to the Trader Lab. Because while every trade is random, if you, let's just say if you don't have an understanding of why, then I think you might, you know, you might be at a disadvantage. Why is the market here, you see? Why are we checking this price? Why might we actually bounce off it? Just think about that. If you can't answer why, then you have, I think, the opportunity to improve your skill set. While we don't know if, we can understand why. That's the purpose of the Trader Lab, to help you expand your understanding of market mechanics, why it does what it does, and then how you might get in alignment with it when you can recognize this behavior. And then it's a matter of indicators. I don't use any indicators because to me it's the auction. The purpose of the market is try to find a fair price. I mean, isn't that it? Auction. What's too high, what's too low. And the thing about this, now this is an artifact that was left behind from yesterday. It was the retail price. So now, of course, we can continue lower. But it doesn't mean we won't react off of this location.
Anomalous event.
So let's see what the market does. And remember, not trade recommendations. So let's look. So let's come back here. Let's look at this behavior. 75. Now here's how this works. This is a consolidation, right? Chop, chop, chop. In other words, this. Chop, 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 chop. Consolidation. And think of it like an auction. Too high, too low. Shopper. Oh, it's on sale. I like this. I'm not paying that. That's too high. Well, yeah, but this is pretty good. And it's and in this chop, and we're all familiar with consolidations, is a retail price. In other words, here, let me show you. This is kind of how markets structure. And again, now here, you see this chop, chop, chop? This is like your little store, pint of ice cream Saturday night, too high, wham, we break away from it. That is saying this auction in this microstructure where this volume is was too high. And when you get this rip away from it, it is like a rejection. Okay, come down, that's lovely, come back. This is the last location, and you could see it right here, this node. This is like too high, it's the volume. This is what volume profile is showing you. Too low, too high, too low, retail. In other words, highest volume is retail. You go shopping, you pay retail, right? Sellers happy, buyers are happy, you guys interact. If the price goes up and it's too high, you go, I'm not paying that. When the price comes down and it's on sale, you may say, hey, this is a good deal relative to retail, which is right there, you see? That's auction market theory. It creates, it is an auction. So if it's too high, then we can auction it in a different location, understanding that this is where the last auction was that was too high. So all of this in here, when we started chopping and picking, which is one of the requirements for this trade, is to try to get a pick or close to it, but you can't run your stop right on top of everybody else. You have to give it a little room to the outside. You don't know, right? So if you got risk neutral, you'd be okay with that. If you got taken out, you could put it right back on again. I mean, that's just the way the cookie crumbles, because this is what you're going for.
S&P sells stock 255.
So, of course, now potential to go lower, right? So let's see. But I want you to understand. Now, so this was our short, right? This was an obstacle. Rip through it, pull back to it, potential continuation, and continue lower. That's the trade. Now for me, since I use structured trades, this for me is my target, right? Now it can do anything. Now here's the other part of this. Right in here, we have another consolidation. Here's a high volume node. This would then be our rotation. So let's observe it. This is our high volume. That's the meat on the bone inside this consolidation. It is saying too high, potentially. So if we come back up here, we're going to observe it. And it's not a trade recommendation. What you're seeing happen in the auction is the market's, remember the market's job. Where's too high, where's too low? Well, if we fall out of a distribution, it is saying this is too high. So now, we're now auctioning in here. See, too high, too low. So, and the too high, too low thing is an auction. and the high volume is there, retail. Too high, potential continuation. So it can stair step down because the market is trying to find, and remember, in all of these are called, I call them fractals. All we're doing is, if this is the developing daily time frame, trying to get in alignment with what these participants are trying to do. And the participants operate at all time frames. That's why using Bookmap is helpful, because we can look inside the fractals inside of this behavior. So we can zero in. And that's one of the things I like about Bookmap, not to mention all the other, tchotchkes. This is our stop and iceberg detector. It helps me see retail exhaustion. And that's my primary use for it, is if I see a consolidation, if I see higher prices, what I'm trying to look for is stop picks at locations. And that's kind of what we were looking at over here, you see. Like here, 318 stops went off over here. That's a lot. Those are our buy stops, retail. We come up here, and there's only 28 coming up. We come up here, watch, and this is how I use it. And I find it a very important tool for me. Watch. It aggregates. So for me to get more minutia, I have to open things up. And when I come to a location is when I'm opening it up, because I want to see the shortest term consolidation for triggers. And this is a triggering structure. See, there's no buyers up here. There's nothing going on. Really nothing going on. No buyers. So this is potential exhaustion. Right here, you see this high volume, right? We break, that's a trigger now. We pull back to this volume, and that's your potential short. And then whatever, right? That's like, off you go. So, and then you scale. And then you have another opportunity here, pull back. Now again, you wouldn't have the same, location, but you could be here, your stop would have to be above here. Still, look at what we're talking about. 84 to 6.5, 2.5 point, maybe 3 point. And in the Trader Lab, we talk about 3 point stops or less. And that's about as narrow as you can slice and dice it, given the harmonic or the typical rotation in the ES, which I think is about 5 or 6 points at this point. So if I can get in for half a harmonic, I'm really slicing it. So let's watch. So now we want to be looking at the 71-ish area or so, not trade recommendations. So if this was the fairest price yesterday, we have the potential, and these are not a recommendation, we just want to observe, to come back and check it from below. Remember, retail price. If we do it in all fractals, we can do it in this one, which is the next higher time frame. So this is an area to observe. Let's watch. And I'm going to take this off of here. Actually, it's all right. So right here, this is a potential short, not a recommendation. So let's see. Let's see what we do. We come to the outside edge. We come and check yesterday's retail price. And it's just like in the convenience store, except this is a supermarket. Was this price too high? Well, if we break below it and we come back and check it, and this is where the auction understanding of how the market tends to work at times underlined. Why? Do you understand why we came back here? I'm asking because if you don't, I think you can gain a lot by having an understanding of how the market works. Because the market doesn't work based on what your indicator does. That has nothing to do with market mechanics. An indicator is only looking in the rear view mirror following price. The auction was created by the value of the participant behavior that they perceived was a fair price, and it's represented by volume, just like your supermarket. If the can of tuna is $1 and most volume takes place, which is where this was yesterday, and now today we're below that price, it is saying in yesterday's auction this was too high. So, and again, nobody knows what it'll do, but do you think it's, here's the question for you, is it a coincidence? Or do you see behavior? If you can see behavior, and again, nobody knows what the market will do. You know, that's we're still waiting for the magic 8 ball to come back from the manufacturer with the special add-on. But if you can understand what it means, you might be able to have opportunity to exploit the behavior, because the behavior is why the market exists, to find a fair price. And if it can't find it, it will keep looking. It's called an auction. So what's too high, what's too low? At the IB, which was where that short was, it was too high for the continuation south. This was the next target, retail from above, because we could check. Now the odds are we were going to go lower, but that's besides the point. These are structured. We break below it, we check it. Is that, you see what I'm saying? Too high. Now what? We got to find too low. Off we go. Any questions on the auction and what it is sharing?
Stop ES sell 298.
David, I actually, the last 2 days, I drew a little profile over it to see if I could read any structure. And I thought, again, we would squeeze. And we aren't able to get over that 37.40, which is pretty amazing to me. And again, I don't know. You know, that's why I was on the long side earlier, because it just seemed to go lower, the market needs to go higher. In other words, take out weak hands, and then it can, you know, which is kind of what I've been playing towards the last couple days. And the longs haven't been doing the job. So it's if this, then that. If not, then what? If, and I could, you know, when these things are happening, there's no way to know. You know, that's trading. So, but now, you know, if 70 or 69-ish is too high, then it suggests south of the border. Not a trade recommendation. Let's see how it behaves. So what do you do with this? This is the location. Outside edge, low volume node, right? So too high, now we don't know where too high is. It can, you know, right, this is trading, right? But this was an important reference point. That's why this is a short. Now, I'm going to take this off. Let's see if we can read structure or triggering structure for you guys. And you should be taking, if this is of any interest to you guys, you should be taking screenshots, notes, coming back, no matter what software you're using, coming back and looking at these structures. So where do we come? Here. Where's this? Here. This has been sitting here since yesterday's RTH close. Not a coincidence, gang. I offer that to you, and if you don't understand what's going on, then I suggest you come to the Trader Lab. Because participants in the Trader Lab know what this is, and potentially, subject to their individual trade plans, how to take advantage of it when it shows up. And of course, past performance is not indicative of future results, right? So, up, break, pullback, chop, chop, break. So this would be a short, you know, stop here,
Stop ES sell 592.
helmet. That's about it. Scale, so you're getting risk neutral. Stop goes above here. By the way, notice this iceberg that's chasing price down? That's pretty amazing. Now, he may or may not want to trade. Oh, he did trade. Sold 750. Boss is asking me about how do I know the difference between chop and trend. I don't know. I don't. In other words, I keep taking the trades because I'm looking for it to break out of chop. Um, and today was hard to trade for me.
S&P
You
sells
know,
stock
I mean, once
260.
I can get in alignment, but trying to get in alignment is where you kind of buy your ticket to ride, and for me, since I try to get scaled, most of the time, or let's just say a lot of the times, I'm getting scale and a scratch, but I'm also getting so I'm not getting much for my risk, maybe a couple burgers. So I do build up a couple burgers, but then I'll also take some stops so I can slide in the hole. There's no way not to do that in the real world of trading. And if anyone tells you that doesn't happen to them, then they might be disingenuous. So for me, this is where I want to be trading is in range, this kind of stuff. When we get into the chop, I'm in there with everybody else, and I'm just paying the price to try to get an alignment for the swings because I want to trade. So I'm using these small structures because I can keep my risk down to a couple of points to try to get edges, for continuation and direction of what I think the context is. And it was
Stock
pretty
ES sell
messy earlier.
259. S&P sells stock 586.
So seems like a long way from there, doesn't it? So if you have a runner, this would have been your next target. So two ways to play this. So break below, pull back short if you were flat, or you have more on, not more on, but more on, and then you're going for this, and wherever. Hold on, guys. I'm trying to move stuff around over here on my other screens. Lovely. $36.50. Yeah, there was. Let's see what this guy did at $36.50. Yeah, there was. These guys interacted. So, and this is a nice. I have no problem getting out of Dodge. And then putting the trade back on, subject to locations that are vetted in the trade plan. Or the other part of it is could be done. It just doesn't matter. So let's watch. So look where we came. Let's just look at the behavior. 70 stops, 16 stops. This is exhaustion. This is a potential triggering structure. It's in isolation, so it is not a trade recommendation. None of these are. I want you to see the structure of an auction with exhaustion, high volume. So break, here, break. So this is a short, and it might just be a scalp. I don't know what it is. I'm not suggesting this is a trade. What I'm suggesting is that you learn to understand what this is. This is a triggering structure, and it is a way to get in. The thing about it is it has to be in alignment with the location subject to your trade plan. You can grab a screenshot of this behavior if you're interested in it. And here's what it looks like in a microstructure right here. So this is, again, subject to time frame. This is a short.
S&P sells stock 257.
Is everybody tracking? This used I'm not chewing gum. Does it sound like it? Maybe it's just my teeth chattering, so. So if that's distracting, sorry about that. Well, it might be, because I'm talking for a while and things get dry, you know, so. So what happened today, if you want to look at it, we were in balance, and it was a messy auction up there. I mean, I'm telling you, it was annoying. I mean, that's just part of trading. But my job is to just
S&P sells
do my
stock
thing.
274.
So that's my job. Now in the Trader Lab, we talk about trade plans. And there's different trade plans for different contexts. This morning was a two-sided trade, so it's a rotational trade. And it was pretty maddening because it couldn't figure out what was going on. I certainly had a hard time with it because it kept flipping around. So it was hard. And I just wasn't sure, not that I ever am, that the day would actually amount to anything. So, but yes, it is amounting to something. So now we're in the trend configuration. What that is, the way in the Trader Lab that we discuss trend configuration is it's outside in trading. So if the trend is down, there's no longs, at least if you want to be in alignment. If you're a counter trend trader, you, in my opinion, should be already profitable when in alignment with the trend. If you want to step up and join the retreating army, that's each individual's trade plan. For me, I have no way to get long. Unless things substantially change, and based on everything that we know with the trend and the location where we are now, there's no reason to get long, right? So the only way to operate now is outside in. So that's called mean reversion, outside in. And so what mean reversion means is you're trying to get it outside to come back in. But you can see what we're doing here. We are just trending. So there's really, at the moment, there's nothing to do.
578. Stop ES by 248.
So let's observe.
S&P by stock 288.
So let's watch. Let's watch the behavior. Now, let's get back here. Time of day, got to be conscious of this. So this market at the moment is shorts only, not a recommendation. What we want to be looking for is rotations with exhaustion. This is your high volume area. You can see it right there. Potential check back here, not a trade recommendation. Let's just watch, okay? and see what it does. Okay, we got to watch this liquidity right here and see what happens. They actually traded, it looks like. Now let's see what happens. We get under here, we can continue. And we are in a trending configuration, so let's watch. They're staying in, so we want to see their behavior. We're watching 39.40 area. If we can get below there, then we can continue. If not, counter rotate. Watch the behavior. It's algorithmic. You see it? Now they flipped. Let's see. Little battle right here. You see it? See the change in the behavior. Watch the book. See how the bids are coming up? So let's see what happens as we come up here to 45. Iceberg just went off.
Iceberg ES sell 400. S&P sell ICE 501.
Coming up to that high volume area.
S&P buy stock 275.
So this is the area we're looking to see behavior. So not a trade recommendation. It can easily take the stops out that are above here. So we just want to observe it. So that high volume area, which is sitting right up around 45 3/4, is the area to observe. So we don't want it back up. And you see how this works. This was your exhaustion. This was your high volume. This was your retracement. This is now your exhaustion. It needs to stay under here. If we get back above there, then it squeezes more. It's not more complicated than that. So let's watch it. So we're watching to see the behavior here, which is where the high volume was on this side. So basically it's this versus this versus this. So this is where it's going to decide whether we're going to continue up and squeeze or down, and no idea. So that's kind of what trading is, isn't it? So let's see the behavior. These are not trade recommendations. We're just watching how the auction plays. So we're just tourists. Remember, market can do anything, and we're coming into lunchtime, tends to thin out and does squeeze. So that's a possibility. And when you do your metrics, time of day is important. See, we are squeezing.
S&P buy stock 260.
Okay, we're going to watch 50. So let's watch up in here. These are not trade recommendations. Trading at 50. So we want to watch.
S&P buy stock 295.
So let's watch in here. Not a trade recommendation. So nothing going on. Okay, thin area up here. So we got to keep an eye. Okay, now pick stops. Watch. So now there's stops sitting under here. So now the question's going to become, can we get lower from here and rotate down to 40, down into here? So that counter rotation appeared to be just a squeeze. Just part of trading, right? So now we got to see if we can get continuation down. And again, no way to know. Algos are pulling. You can see them, that little algo pulling, moving up. And they're coming up from underneath, so that's like putting pressure to the upside. So we held that high on a test so far. So this is the structure. And of course, if we take it out, then, done. So, this is rotational. Trend is down. So what it is attempting to get in alignment for an outside in. Um, and then, potentially this and maybe lower. Don't know. Time of day, though, is chop. So nothing to do here except if you're in a position, it fails over here. And I should say here. So that's all there is. These are not trade recommendations. We're trying to observe the auction and how it works. The thing with if the trend is down, at least for me, and these are not recommendations, it's only short. So it's trying to find outside edges. Remember, where is it too high? And where is it too low? Where's retail? This is retail. So the potential is if you get outside, this is the area where you have to be scaling against this high volume. So you can see what happened is we came back and checked it, came back and checked the high volume, and now we're rotating off it, which might be saying this is too low. So we don't know. So we'll see. So that's kind of a fractal aspect of this whole thing. So nothing to do. So the way sequentially to think about this is too high, too low, retail. So when we come outside, it's to check retail, which is what this rotation was all about. So then it's outside, in, this is called mean reversion, and then potentially, since the trend is down, to continue lower or not. So what are we doing here? If that's too low, we can come back outside and then we're going to try to find what's too high. So that's basically what's going on in the auction over here. But if you can kind of think of it in a fractal, this is your store. This is the current auction inside a higher time frame auction. So if we're thinking that there might be more downside, and again, we don't know, right? It would be outside in unless things substantially change. So we have yesterday's low. Do we get back in the range or do we just test it? So let's go take a look higher up. See what the structure is. So we can come up into this, take stops up here, right? When you think there would be some potential retail stops up in here. But the thing is, when you get outside, this is kind of what we're looking for. And it can be, with mean reversion, it's tricky because where's the real outside, right? So that's Wow, we're having an audio problem here. Okay, sorry guys. Um, this is an outside in. I don't know how much you lost. Um, the scale was here, and the next target is here, not a trade recommendation. These are what we are attempting to do is get it aligned with the trend. These are rotations are consolidations, and stops are on the outside edges of these, okay? When we come up here, this is a potential short, stop is here, scale was here, not recommendations, next target is here, and who knows, right? So that's it. Does that make sense? Eleven 38, 39. How long was the audio out, guys? Nothing like me. Yeah, it's mean reversion. I was talking about context, and for me, it's only outside in. So I have to try to find outside edges. And so here's what happens often. And again, we don't know. Where's the outside? And this is the tough part of mean reversion. I'm not telling you, because why not here, right? Well, you put this on here, you're going to take a stop, right? What do they say? The agony and the ecstasy. I think that's part of the agony. Come out here. We're still looking for the outside edge. This is what mean reversion is. And I will tell you, for me, I just have to live with this, because with mean reversion, we don't know where outside is. And because they all look kind of the same, you know. Where's this outside edge? Well, remember, I can't get long. I mean, I can't. I mean, you know, I'm just following a trade plan. So I can only sell unless something dramatically changes, which at the moment, perhaps not. But I don't know. So my job is to get risk neutral and then hang out, see what develops, manage the trade. Are we going to take this low out, or are we going to rotate all the way back up and squeeze the shorts first? Isn't that the question? Don't know the answer. So, job, hang out. Right now, 50 is roughly the high volume node in here. You can see it there. So this is retail. So we can come back up. If we keep coming up, then perhaps we're going to come all the way back, right? And the trade would be over. So let's see what happens. So this is our kind of our retail location, right? Price check. Let's see. And this is what we're referencing. So we have the volume in here, which you can see right there. Too high at the time. If this pulls, it's going to open the door. If it stays in here, then maybe not. So this is where this fails. This little node up here, this was an auction. This, chop, chop, chop. And in this store, this was too high. This is where this trade fails. We come back to this. So you see that node? That is it. Now, we're in balance. This is retail, so we can do this. This is where the trade was put on, remember? You'd be risk neutral, you'd have your helmet on, and you'd be like the rest of us in here. It's maybe. Maybe we come down here before we come up here. That's it. It's not more complicated than that, because everything else is random. I hope that makes sense, and I hope you're getting something out of this. So it's top down, outside in, which is mean reversion. If you're interested in understanding mean reversion, and I underline the mean, we have downloads in the Trader Lab. You can, kind of take a look at what this behavior is, and potentially gain a better understanding of why the market does some of this stuff. Why is it doing this? Why are we rotating in here now? The market is basically checking, is this fair? Is this too low? Maybe. And if this is unfair, if we spend time, we can release and move up higher. That's basically what it's saying. Over lunchtime, which is where we are, this is Central Standard Time, this is when we can get counter rotations. So there's nothing left to do. And when in the Trader Lab we talk about a two-lot configuration to allow us to attempt underline to get risk neutral, which is what this is. So if this comes all the way back and takes this out, the worst that happens is scratch. I think that's reasonable. So now we got to see what it does here, right? So we'll hang out and watch this one. By the way, you guys in YouTube, I invite you to come to the Trader Lab if you haven't, and take advantage of the 60 PDFs you can download of a number of different behaviors that you can potentially get familiar with and maybe integrate into your trade plan or develop one if you don't have one. In the Trader Lab, it's really about having a plan and attempting, underline, to get in alignment with what the market is trying to do. Because the function of the market is try to figure out what's too high, what's too low, and the rest of it, and we don't know. Now, it looks like this is going to get taken out up at the 52, but there's nothing you can do about it, other than be risk neutral and see what happens. Does it get to your next target below, or does it get to your stop first? If you're risk neutral, it certainly changes what's going on in your stomach lining right now, right? Because if you're all in, all out, your emotions are being tweaked in a big way. In other words, you had all this open trade equity. Then it comes back here, and you're ready to jump out a window. Then it comes down here, you're feeling better. This guy pulled, so this opens the door. So potential move higher here now, not a recommendation. So let's see what it does. We want to see pressing to get the market to come down. And you do see some algorithmic behavior, but it looks like it can move higher now. So watch. We got to see the selling just hit it. Those are algos. And you don't know their intent. They could just push it down to get long. Or they're supporting a position from 52, and they're trying to push the market down into their liquidity around 45. And then depending on what happens right here, you're going to watch the book. Watch the 45, and you want to see what this guy does at 45. Are you guys tracking? Okay, so let's watch. Now the guy pulls at 51. He may only be getting long down here. We don't know. Remember, algos, nonsense. And the other part of algorithmic behavior is to get you off sides. So for me, they're not buy and sell signals. They are kind of, they can be good, they can be bad. It's all maybe. So let's watch this guy at 51. He pulls, he opens the door. Let's see. You see he's starting to lighten up a little bit. He might not be real. Let's watch. He's pulling. You see how he pulls? So this was not real. See how he pulled? So now this is gone. We can open up for potential move higher here. And I'm not saying it's a move higher. I'm saying potential squeeze. So we got to watch right here. But what was here before is no longer here. So that opens things up potentially. And again, this is where this all fails up in here. So let's see. But do you see the way the book behaved? Now, what do you do about that? Well, a couple things. What's your trade plan? If you're familiar with order flow, and I recommend you attend Bruce's webinars Monday, Tuesday, and Friday morning, 9 a Central, 10 a Eastern Standard, see the return, to get a better understanding of order flow, and at least how you might interpret what's going on with it.
ICE 504.
And that's available to any of you if you're interested in the Trader Lab or any of the education that Bookmap does. There's tons of free education. Stocks, if you do that, Qs, crypto, options, you know, futures, of course. Uh, a lot of great education from other, professional traders. Kind of share their ideas and kind of what they do, and you might get something out of that. And I always, I kind of think free is good. So this here is potentially vulnerable now because there's see how the book is no longer supporting the downside. This was kind of the last push. And remember, the function of some of these guys is really just to get us off sides and take the other side of the trade. You will never know they're taking the other side of the trade because they can shoot off one lots in nanosecond sequences. So we can't detect them, but we can see some of their behavior. So that's kind of what the order flow is about. Now look where we came. This is our outside edge, not a trade recommendation. Remember, retail. Now I'm in park at the moment. Was not in park previously. So let's look at the auction. Potential here. All this is setting up as counter rotations at the moment, so we're in balance. What that is saying is we're on these outside edges, and this is your obstacle. Remember, retail. So if you have to have a plan that allows you to operate back to here. So where's the range? So if you're in here, right, you got down here, all nice. Now you come back in, you still need to be looking at this. And this is rotation. So this is what's called mean reversion. What you're doing is you're attempting to get outside in. Outside in. That's how this works. Okay? Is everybody kind of following me on mean reversion, underlining the mean? Well, thanks, Business Beyond. Thank you. We just had a VPoC migration. This is saying on the day, this is where the highest volume is. So this is kind of bearish, right? Outside, pullback, check to the high volume, potential pressure lower. Not a recommendation. Let's see. This is how you can use this auction. This is that high volume, right? Retail, too high. Pullback. This was your scale, right? Or whatever. Chop, chop against here, potential short, and it continues. You see? It's sequential. And it is, if you understand why this is created, remember, this is an auction right here. And that you'll notice it's a consolidation. And what I think a lot of us, we think of volume profile and all, it looks probably pretty mysterious and confusing. All it's doing, and it's really not complicated, is trying to find what's fair, And the other part of it is, these are called distributions, but what they really are, there's different language to describe things, but in the most simplest terms, it's just a consolidation. So if we're in this time frame, which is kind of what we're trying to align with, which is this higher developing daily time frame, in the fractals, this is the same behavior, but it's only this range. So if you can understand what's going on in here, you can understand why the market might come back and check it. You see? Grab a screenshot if this makes... Now, it might not make sense, but if you stop and think about what creates a price and the behavior, it's like if you shop at a store and the price is too high, and you come back in that store and you say, I'm going to go shop elsewhere, that's kind of what this behavior is about. Now, of course, we're now, back taking the stops out. So when we think about, and this is the fair price, the next trades, wherever they might be, are to come back here. So let's go see where that location might be. And these are not trade recommendations. We are, as they say, tourists. So let's go take a look. So we're looking at our profile. This is our retail price. And if you go to Trader Lab, you will find more information about mean reversion. Mean, which means outside. And we don't know where outside is. There's the challenge. But we know where the inside is. It's here. So this, unless things change dramatically, at some point is where we want to be aiming for. Now, our goal would be to find outside. And this is where it gets, I think the term I like to use is tricky. So let's watch right here. Watch right here. Watch this. We're just watching now. So we're looking for mean reversion. Nothing has changed. Outside in. Back to the VPoC. And then potentially low of the day. No clue, right? So, micro high volume, pullback. If we can stay under here, then we can get here. If we can't, then we, blast. Just the way it works. No way to know. Let's observe. And these are not trade recommendations. This is all behavior. Takes it out, we move higher. It's that simple. So let's watch this behavior. Chop, outside edge. Stops are going to be over yesterday's low, so we want to try to watch this behavior. Right in here. So just sit back, be a tourist. You notice how it's fighting right here. This is an outside edge. This is yesterday's low. Stops are up in this area. So it's a testy spot, you might say. Book is thickening up above us. So let's watch the behavior. Trying to mean revert over here. Trying to get back to the volume point of control below us. Here. Outside edge. Didn't get into yesterday's range yet. So this is the potential on this one. It's the same idea that tried to do mean reversion. And these are not trade recommendations. Let's see what it does. Very choppy. It's lunchtime. So we'll see if we can get back, because this is mean reversion. And I always do stress the mean aspect of it. The book is getting a little dark, you notice. So it's easy for the algos to push it around. Let's see what happens. I do suggest that in your trade metrics that you look at time of day and you see what your expectancy is based on the time, and you will be surprised, most likely, what what insight you get. There are going to be times of the day and even days of the week where your your outcome goes down. So this is our next target. Okay. So this is the primary objective to get. So depending on how you operate, if you got short, you'd either just use a fixed price scale to cover your risk on your runner, or this would be right ahead of this is your next target. So you could have, and again, subject to the metrics you generate, this is the primary. Now, it's either, think about the price check in the aisle. This is the daily aisle. If this is too low, then we're going to come up, take out the shorts. If it's not, and it's the fair price, and what we're trying to do is find where is it too expensive, right? Then we can continue. So that's the trade, not a recommendation. Let's watch the behavior. Are you guys tracking? So our next area is this. Not a recommendation. So if you put this kind of trade on, if you want to think about it, and if you could get in this structure, and here's your structure, you got the book pressing, you got a pullback, you got your high volume. Now, sure, tricky, but you're trying to get here. Then, here. And these are not recommendations. Can you see the logic in a consistent process? If you're getting something out of this, guys, how about giving me a thumb up? Throw a thumb, Trader Lab participants, how are you guys doing? I'm getting a lot of thumbs up. Anybody throwing anything? I always look for a shoe to come over the dashboard or something, So 40 is the next layer down. Not a recommendation. 2 thumbs. Well, thank you. 2 is good. And by the way, guys, if you're getting anything out of this, I invite you to come to the Bookmap Discord Trader Lab. Plus, take advantage of education on stocks, options, futures, crypto, if you go that way. See various traders kind of show their stuff. You don't have to be a Bookmap subscriber. You won't be solicited. And the Trader Lab's a great, place for traders to leverage their collective experience. We all go down the rabbit hole, right? Looking for the quote answer. And I can tell you, I've been down so many rabbit holes, I've grown fur. So that's humor, by the way. Yeah, David, it's yeah, David, just go to there is a live broadcast on Discord, but if it's full, and it does get full, you can watch it here on YouTube. It's got a 15-second delay. It's kind of our backup thing because we get kind of filled up the Trader Lab has a rather robust community, and it's a neat group, I'll tell you. They get frisky now and then, but pretty much, Next target is 40, by the way, right?
S&P sell stock 298.
Let's see if I can get my fill over here, and then there we go. Okay. So that was that. We always say horseshoes and hand grenades, right? So in theory, I would be done with this. And it's not that it can't go lower. It has the potential to go substantially lower. What I do, and it's not that what I do should be what anybody does, because you have to kind of find your groove, kind of what's your thing. I trade locations to targets. And I do use the order book, but we don't know what this guy really is going to do. Is he going to pull? Don't forget, this is all computerized. It could get within one tick and they can cancel all this. We can't do that. By the time I want to cancel something, I'm still moving the mouse, right? And so they're all, co-located. They see the quotes even before we do. If you want to think about it, the reason they co-locate and it's all computer operated is because they're watching this in nanoseconds, and the co-location means they get the quotes before we do. I mean, if something's transmitted from the exchange, it has to go to your data provider server, and then it comes to you, and then there's latency, all that, right? This is the real world. So I think you need to be aware of that. PJ Strong, make my own channel. Well, this is the, I do this for Bookmap. And the reason it happens, so is I used to type this in the futures room in the Bookmap Discord channel. And because I try to imagine trying to type this stuff. So it was kind of by popular demand. It wasn't intentional. I'm not a vendor, I just do this because of what I went through, trying to figure out some things. And I want you to tell you, it was a nightmare because when I started out, I started in 1980 when indicators and desktop computers were kind of a new thing. Apple I, my first computer was an Apple IIe. So, and I started with classical bar charting. We didn't have candles, at least not in the U.S. at that time. So, and we didn't have real time. We had, it was just really primitive. No internet. It was done by paper. You call up the floor, place your order, timestamp, write it out on a piece of paper. I mean, this is kind of where I started. So, along the way, I went down, besides classical stuff, that we all learn, then it was system design and, trading systems and a lot of that. I was a swing trader and trend follower. Traded many, many different markets. Got introduced to market profile by Peter Stottlemyre. I think it was in 1985 or 86. And when I first looked at it, it seemed real interesting, and I couldn't do anything with it. I mean, because I came from a place of precision and thinking precision, and I didn't really get the idea of slop, and I didn't get the idea of retail trader behavior. And back in the day, we didn't have tons of day traders. It was more, positioning. I used to trade the big S&Ps, $250 a point. So that was fun sometimes.
Yes.
Anyway, that's just a little background on me, and then I was a money manager. You guys, I think you all know that if you look at my bio. That's not really important, because the world today of trading is completely different than it was when I started. And it'll be completely different again. So it's a constant thing of changing. So we're never, quote, done. And if you come to the Trader Lab, you can see my video that I did, the advanced webinar. Kind of talks about that you're never done with this. It's not like you go, okay, I got it. No, you don't got it. You get some of it, and then it's always changing. So, as the technology evolves, and you have to also realize who you're trading against. You're trading against the best in the world. And I don't mean retail traders, I mean shops, HFT shops, hedge funds, banks, you know, big, professional trade desks. You do need to understand where you are in the financial food chain. If you can think of it that way, not only is it humbling, but you need to understand that with our cost structure and everything, I do think you need the range to justify the risk. And in the trader lab, these are things we talk about. It's not about, trying to catch this little pullback for this rotation, which might be wonderful. But the point is, if we're in a mean reversion configuration, think about this. You need to be outside to come back here. Now, if you try to trade inside out, it may not. You may end up just getting to an outside edge and then coming back up. And again, we don't know that, right? But where's the better trade? For me, it's out here. It's not here. This is a target because of the nature of the market to come back to the mean. That's what mean reversion is, underlining the mean, of course. This is potentially an outside edge. And again, I don't know. That's why it was my target, right? And then we come back to the mean. So either this is still too high and we're going to break away from it and continue south of the border, or revert back. So that's why for me, it's outside to outside. And then after that, punt. I got to take this call, guys. Get a glass of water, get your pizza delivered. I'll be right with you. All right, I'm back. Sorry about that. It's getting cold here. Well, not cold, but in the 50s in Chicago. And, you know, this is where you turn your boiler on. And I live in a Victorian. So I think when they put heat in here, you know, it was back when there was gas lamps and, you know, all that kind of stuff. Notice where we came, the behavior here. Say, outside. This is this mean reversion. So if you understand the context or if you develop an understanding of why, I think you can build around it. Now, again, it's just a personal opinion, but it's based on a lot of experience. I don't use any indicators because I found I need simple. And you may go, is this simple? Yeah, it actually is. But it takes a little time to get your head wrapped around it, especially if you've been, because in my opinion, and again, everybody's entitled to an opinion. It's not plug and play. It's not plug in the right indicator or the right mix, and all of a sudden you have a trading business. You know, this is about creating potentially a career in trading. And you really got to do what the rest of the crew out there, the retail trade, is not doing. If you are acting or thinking or using the same tools, and we know statistically retail traders don't have a good outcome, if you're doing that, it might not be reasonable, and this is subject to your trade plan and your reality. If it's not working, then it's not about the right mix, the right time frames, the right moving average, the right tweak of anything, you know, adjusting the envelope or this or that. It's not about that, because indicators are following price. They're not contextual. They're not context sensitive. An indicator doesn't know that it's only short today, probably, and mean reversion. Where's the mean? Which one of these, right? Indicator can't differentiate. Well, we can see behavior in the auction that can help us identify, because we understand the behavior that creates this. This is all behavioral, and it's auction based. We can understand that we need to wait for an outside edge, and it's mean reversion, which means outside in only, right? I don't know if your indicators solve that for you. If they do, it's great. If you have a positive expectancy and you're a profitable trader, believe me, don't change it, don't touch it, right? But if you're not, and you think the answer is in taking the screwdriver and adjusting the carburetor, remember when you could do that, by the way? It's not, in my opinion. And I invite you to come to the Trader Lab and just kind of find out what other traders are doing. And also talk to them about what this process has done for them. Now, you know, past performance is not, you know, necessarily indicative of future results, because everybody is different, and managing the emotional states is really important. And part of that is risk management, how you manage your trade. Can you get risk neutral? It changes your brain in the sense of the chemicals that are released into it, you know, fight or flight, let me out of here. I mean, think about if you're sitting here all in, all out, or even if you're running a one lot. I mean, whatever it is, right? And you get this. You're popping the champagne cork. You're now experiencing this or this. What are you feeling emotionally? What might you do? You're going to be saying, I should have got out over here, right? If it comes all the way back up, you're going to jump out a window because it's emotional. Do we only come back here, price check, and then continue lower? You know, that's a possibility because that's what's been happening. Where are the stops? Here. Here, lunchtime, Algo City. So I have no answer for you as far as what it will do, but I certainly know what it might do. So my job as a trader is to take my experience and my understanding of what might underline happen, and then try to fit my trade subject to it having enough range to justify the risk. So this was a short to here. To here. Trade's done. Then what do? If it continues lower without me, I sit here and I don't have regrets. If it comes back up here, because I think it has that possibility to squeeze, then I'm going to be looking to get short again, unless something dramatically changes. And these aren't trade recommendations. This is what we do in the Trader Lab, you know? Uh, T-Bone, I'm not sure what you're asking me. Mean reversion trades failed? T-Bone, a fair number of them. But in the Trader Lab, it's really about taking intelligent risk, accepting the randomness. You know, a failing trade to me is part of trading. It's overhead, it's cost of production. I think, in other words, it's not right or wrong in trading. It's about following your trade plan, which has been vetted. And mean reversion is difficult because we're trying to find an outside edge. And for me, I'm a believer in structure, auction. So if I see a setup, I should say a location, I'm aligned with the context. My job's to put the trade on, try to get outside in. I can't do anything with it here because this is retail. And I know this could still be too high and we can break away from here. I understand that. But that's okay because there'll be loads of opportunity for me in this configuration. And if there isn't, if it just runs down 100 points from here and I'm not in it, as much as emotionally I might say I wish I was, if I don't have a trade, I don't have a trade. I just wait for the next bus. That's my job. You know, my job isn't to make something out of nothing, and my job is not to impulse it. My job is to follow a trade plan and get risk neutral, which is my trade plan. And try to get in alignment. Losses are cost of production. If you're in the business of trading, and this is just for everybody, you got to separate yourself from being right or wrong. And I understand it's hard to do, but it's part of the discipline of being a trader and not looking for approval. It's about understanding probabilities and knowing that you're looking to take advantage of a probabilistic outcome that is random. So it's over a sequence. It's not over today or, you know, whatever. It's just about what might happen, and then can you identify a location that gives you an edge. So I can't, at the moment, I cannot get involved over here, even though we can break under this low and keep going. So I need the outside edge. Now, under certain conditions, I would operate here. This is not the condition. And you see what it's doing? That's mean reversion from the other side. I can't get long, right? I mean, we are basically out of balance, and we're headed for Fort Worth, Texas. So at the moment, 3,600-ish might be our target. Somewhere along, you know, the hip parade, not necessarily today, not now, not ever, never. I have no idea. But we've broken out. So, you know, I have to wait. So anyway, losses, yeah, I take them every day. And I'm glad I do. Not that I'm glad I take a loss. I'm glad I manage my risk so that I have opportunity and I can keep executing, because I get out of alignment because I don't know. If the context is changing, so you know, is I'll be on the long side and I'll get run over and I'll go, well, you know, and I may still try another one because it's not, you know, because I'm doing mean reversion to the long side, you see. And then it can take out that edge, then come back in again. I take it again. And if it fails, then I'm going, oh, that's interesting. And then it's like, wait, is the context changing? There's no way for me to know ahead of time that the context is changing. And then I feel like I'm an oil tanker and I got to turn everything around. You know, I don't turn around fast because I can't tell until I have hindsight. I mean, that's just the way it is. So I trade the context that I perceive, and if it changes while I'm zigging, I pay. Cost of production. So that's just what happens. That's trading. So losses are just part of the business, you know. Following the trade plan is what the deal is, and that's kind of what you need to do, in my opinion. If you don't have a trade plan, or you don't recognize the difference in behaviors, then I think it might be advantageous that you visit the Trader Lab and maybe add another piece to your understanding of how the market works. And by the way, that I'm not speaking to you specifically. I'm just saying, you know, in general, you know. So T-Bone, I don't, I'll trade the trend, but what it is I only want to be aligned with what I perceive as the advancing side. And then to get aligned with the trend, I have to get outside. I don't want to trade inside. I can, but it's much more aggressive. And look, what do I have for range? You see? So this has much more risk for me to try to get in here because I can't get in here. This could be a short right here. Where am I going? I can't trade this because I need this as a target from the outside edge. So I just, that's not my trade. So, not mine. Could be somebody else's. And I'm not saying I don't do this. I'm saying is the smart trade, statistically, is the outside trade. The inside trade has much more risk to it. So it's just the way it is. Trend is down, so it's only short for me. This, more risk than that. I mean, they all have risk, but because what could happen here is we could get outside, come back, and reject this and go up. See? So when we come out from here, we can come back here, rotate down, and then come back up, right? Which is what you're seeing. So it's mean reversion, but since the trend is down, it's only short. I hope that's logical. And again, I don't know what it's going to do. If anyone tells you they know, I would suggest you think about what that means. Are you guys aligned with me? Well, Danny, if you find it interesting, I would suggest you go to bookmap.com. You'll see a link. Join the Bookmap Discord chat. Come to the Trader Lab. You'll see it after you kind of they say hello to you. You introduce yourself, and then come to Trader Lab. There's 60 PDFs of this behavior that you can download of different behaviors. This is just one of them that you can take a look at and study. And then there's a introductory video on auction market theory, volume profile, and the integration of these behaviors, locations, and then it's up to you, of course, how you implement it once you understand how this works. It's a piece, but I don't think a trader, and again, it's just my own personal experience, having been in the business for over 40 years, really can get the maximum opportunity of wanting to be a career trader without understanding how the market works. I think the software vendors, put 50, 100 indicators in a software package, and that's what everybody buys. But if you think about what the statistical outcome is for retail traders who use that approach, it's not good. And you guys might have heard over 90% of retail traders do not succeed. Ask yourself why. My opinion, and it's only one person's opinion, is they kind of get the cart before the horse. If a trader doesn't understand how the market works, how can they deploy any tools? Yet we kind of think it's plug and play. Plug and play. We're all used to plug and play. Let's be real. Is it real that you can buy a software or lease a software package and then have an ATM in your basement because, quote, you're a trader? Is that realistic? When prop shops and hedge funds have PhD mathematicians figuring out how to take your dollars and other people's or entities' dollars away from them, can you compete with a plug and play? Do you think the hedge funds are doing that? I'm going to say no. The high frequency traders, the algos, what is that all about? They are not doing what we are doing. So maybe as retail traders, we should try not to do what other retail traders do. Just a thought. And if you're not successful, I recommend you come and check out the Trader Lab. And it might just be a stop along your path, right? And that's all good. But there's a lot of education that Bookmap offers. And if you're not taking advantage of it, I don't think you have to pay to get educated. You've already paid with stops and errors and maybe not having a formulated trade plan or knowing what your expectancy is of the outcome of any specific setup. If you don't know these metrics, you cannot develop the confidence. You're always going to be curve fitting, looking, trying to drive Formula One by looking in the rearview mirror. It's probably not a, let's just say, statistically positive process. So, those are the things you have to think about. And if it's something that you have an interest in, I would suggest you, come visit the Trader Lab, introduce yourself. Our senior trader has 54 years experience. Makes me look like I'm wet behind the ears. You know? Yeah, again, a lot of traders don't know about R factors and behavior. It's really statistical because trades are random. And I know we're all emotionally attached, including me, to being right, dollars, not wanting to lose. But think about your emotional state with this. So this is our mean reversion, you see. Now you see why I can't get short here. I certainly can't get long. So what am I going to do? If I got short here, I'm hoping to come out to the edge. Well, I can't get short here. By the time I get into this thing, I got a couple of points. Well, where am I going? I can't do it. And why can't I do it? I got a trade plan. And if I do it, the 2x4 comes out, or the cattle prod I keep next to my chair, and I give myself a zap. Behavior modification, by the way. That's not a recommendation, by the way. Here's something for you guys. Years ago, those thick rubber bands that you get like in the U.S., when they drop your mail in the slot, they put a thick rubber band. I put one of those on my wrist. And I would snap myself because that's behavior modification. I'd do anything to overcome my natural wired weaknesses, which are emotions. The fight or flight emotion can't differentiate between intentional, you're putting a trade on and taking risk, or the saber-toothed tiger out on the, on a savanna. So you're being triggered by chemicals. Those chemicals will swamp your logic. Are you familiar with them? Do you understand the mechanism? And can you modify your behavior when you experience chemicals? Now remember, it's chemicals being released in your brain that scramble intentionality. You see. Do you understand it? If you don't, come to the Trader Lab. We talk about all this stuff. Is this a video game for you, or is this a business? These are the kind of things we talk about in the Trader Lab. Because I think we have a fantasy when we come into trading about what it is. Because nobody really tells us, And if you go on the internet, it's appalling to me what's on the internet because you can't differentiate. The old thing, fake news. Well, there's a lot of fake because there's a lot of individuals, retail-wise, who will do anything to be profitable. And they chase illusion, in my opinion. So how do you sort it out? That's the question. So I think the way you sort it out is you have to put your toe in the water and don't rush in. Your job is to create a business, not to play a video game and not to be a gambler. If you want to gamble, I always say go to Vegas, see the show, have a cocktail, do the buffet. If you want to be in the business of trading, I think it's time, if you're not profitable, to step back, think about what you're doing, and think about if what you're doing is just a derivative of what you've always done. In other words, new indicator, new adjustment, new mix, new time frame, new combination of this or that, new line across the chart, whatever. Think about it. Because in life, I don't think we get a lot of opportunity to have the time and the dollars to potentially participate in maybe the best business on the planet. But don't think for a moment that it's easy. And it's not because it has to be complicated. When I started out with system design, I thought complexity would somehow reveal the secret, right? More indicators, more tweaking, more interactive, processes. And it was actually the opposite. But I kind of thought that's what it took, But over the years, what I kind of figured out, that's not what it takes. If anything, it obscures what's right in front of you. So that's why I don't use any indicators. I don't need an indicator because I'm participating in what, on the base reason of how the market operates, and that's the auction. And then I'm using a tool called the volume profile to see the participant behavior. Price alone is not the thing. It's the volume that happens, where it happens. And based on an understanding of the auction, we can then determine potentially where a price might be too high. And this is an example right here, right? Which was a short, right? I think that's the one I took, yeah. Short to here to here. That's the one I narrated for you. I was on that trade. And I don't call trades, but I was saying is, here it is. I was saying is, here's the behavior. Because this is not a trade calling room, right? And you can see it. If you can see this behavior, now we're not getting above here. This is negative for the market. I still cannot get involved over here. I just have to sit here, and this can break down from here. So we'll watch it. But I don't have a plan to get short for this reason. Short back here. Short here. Higher low. What's going to happen? Potential still to squeeze. I can't do anything. And you have to, and here's the question. If you ask me, are you okay with that? I'm going to say yes, because that's my trade plan. If it breaks below here, do I have a way back in? Yes. So what do I do in here? Nothing. Now, let me give you the next piece. If I'm only trading from here to here, which is what it was, that's okay. So it would be short, scale, flat. And we only talk 2 lots in the Trader Lab so you can build a trade plan and potentially have a trading business. Once you build the foundation piece, and you can, because you have to deal with the psychological demons, and you're not going to get to experience that until you put $1 on the line, you know. So you get into sim, you develop metrics so you can develop confidence. You take the setups that we discussed in the Trader Lab, you research them, you practice them, you do replays, you practice triggers, you build a catalog of trades. Depending on the context, you turn to your catalog of trades and you wait for the bus that comes to your location. That's what this is. Catalog of trades, mean reversion, trend down. If it was trend up, we'd be going from the other side. It's that simple. And you wait. You wait at the bus stop, and you're attempting to get the outside edge. That's how this works. Plan. And then you execute. And then whatever happens, happens. It's random. But you create the metrics so you can see that since there's randomness of outcomes, and we have no clue, some days you're going to do this trade, and I'm just making up some numbers. You get 5 winners, 2 losers. Other days you get 5 losers, 2 winners, or no winners. What's the variable? Randomness. If you have metrics, you'll know over 50 trades with a random distribution whether or not that situation or that context and that behavior has an edge based on how you interpret it. If it has a positive expectancy, you need to be able to refer back to those metrics so you don't get the screwdriver out and change everything that's not broke. But if you don't have metrics, you'll never know. You see? That's kind of how it works. Yeah, it's true. The only traders understand trading. And if you're new to trading, you do not understand trading. And it's not your fault. It's because nobody's really giving you the straight oil from the can. You go on the internet, and we all want to find the easy. And, so anyone can show you some choice, examples of something. Haven't we all seen that? This is real time, and you got to see it. Just the way it is. The IB short, you got to see that. And that was a little bumpy, but it did its thing, right? So it's sequential. This is how I do this. I'm not saying it's the best way. I'm just saying it's one way. You can make it better. And the goal of the Trader Lab is that we all get better. And there's some great work going on in the Trader Lab as far as creating trade plans. Traders share their work. We get, and that's the leverage of working in a community, and not being on your own under a rock someplace. Trading is a pretty lonely business. And you can't really discuss it with anybody because it's all, remember, the fantasy plus versus the reality. Well, there's quite a difference, So I'm just going to suggest that if you're a little more interested in some reality, that you check it out, the Trader Lab, and you might find it useful. Either way, we'd love to have your input because we all leverage our collective experience to get better. I learn every day from you guys. And if you think this is about ego got checked out, left off the table a long time ago. There's no ego in this anymore because it's the most humbling thing you'll ever do.
Sells stock 255.
So we couldn't get back above here. That was kind of telling, So I have nothing else to do in here. What I was starting to say to you guys, if depending on the number of contracts you run, what you would be doing is, so scale, next target, hold. That's what I was I think I got off of that a little bit. So then you'd be going. So for me, or at least let's just say for the Trader Lab anyway, the Trader Lab is 1, 2, out, because I only talk 2s. Then if you're running 3s, there's a runner because we're out of balance and the context is down. So you'd just be holding. The other thing would be if we came back outside again, I'd be putting this trade back on or adding, you see. But for me, I don't add here. So just hanging in there with your runners. Or not, or you're done. This trade is over. There's nothing more to do. Remember, I did say if it goes down, I have other ways back in. So, which we don't discuss here. But the fact is, you can develop a plan. And like everything, it's all random, and you have to be able to execute it is the other issue. One of the things that's really hard when you kind of like, whatever, you're looking at what I do or, what anybody does, is it's not copy. You have to kind of find this rhythm and understanding of the market and then find the pieces that mentally can align with you. A lot of us, I think, I know, I look at these big moves, and I go, oh, I want that. Yeah, but it's random. Now, today, the context suggests, lower, right? But what's my trade? Well, if I'm running a 2, this is my trade. I'm done. Right? And then I have nothing else to do. Now, if it goes another 20, 30 points, I'm not in it because I don't have more runners. I accept it, and it's all fine. It just doesn't matter. Let's watch this behavior right here. Let's watch this. Anyway, I hope I'm not, boring you guys with this. But I'm so passionate about it because I've just seen so many traders just, let's just say, they never had a chance, really, because they just didn't know. They couldn't differentiate. So, and they never, look, it took me a long time to figure, to learn, to understand, to think of the market as an auction versus an indicator. That it's this crossed this or this did that, and it's all math-based. Well, it's not. It's really what the job of the market, remember, let's go back to the fundamentals. The job of the market is to figure out what's this thing worth. I mean, what is it worth based on the inputs that are known and maybe even unknown by us? What's it worth? Well, the market's going to go as low as it has to go to attract the buyer. Just think about it. If you're a seller of a product and you can't find buyers, what are you going to do? You're going to keep lowering the price, right? That's why the market's going down. It's looking for buyers. And it does it in all time frames and fractals. Then where's the energy in the market? Well, buy stops create buyers, right? And those are squeezes. And we can anticipate that. That's retail trader behavior. Let's look at this. So that's the job of the market. Now, we don't know where, by the way, if you're going to say, well, where is that? I'm going to tell you, I have no idea. Because my job is not to know, because I can't know. My job is to try to recognize behavior and then think about retail trader behavior. What do they do? Right? By the way, now we could do anything here. I have no idea what it's going to do, but we could come back here. So right now, even though we're making new lows, right? Did we make a new low here? Yeah, we did. It's still mean reversion. And it could fall right out the bottom and we could be at, wherever. But observe the behavior. It's looking for too low. Now, it does not have to come back here. It does not have to do anything. So that part, I think we can agree on, that it can do anything. So we agree on that, right? So if I'm operating in this, I have to be conscious of the context. So trend down, and we're in a mean reversion configuration. Now remember, it can fall out of this and keep going, right? In other words, it may come back here and go, nah, we're not paying that, we're out of here. Bang. Or this is too low at the moment, remember, and here. So let's observe it. Now, I'm going to say again, I can't be a buyer because the trend is down. So what I need to see for me is it to come back out the other side, squeeze, and then exhaust, and then try to come back in. That's mean reversion. And if you guys are interested in mean reversion, of course, besides coming over to the Trader Lab where you can get all those PDFs of all tons of great examples of behavior, and you can go to bookmap.com, join Discord chat after you come in there and wave to everybody. Come over to the Trader Lab. It's all pinned to the top. You can download the PDFs and watch an introductory video, and then take advantage of all the other free education Bookmap offers. Stocks, options, crypto. I repeat that because I work so hard to get educated. When I started out in this business, and I was never on the floor, I was an off-floor trader, and we didn't have many of those when I started. All my friends were floor traders, and they thought I was out of my mind. Because back then, it was fundamentals, technical analysis was like voodoo. I mean, it really was looked down upon, if you can imagine that. We really didn't have indicators, very little. I shared an office with George Lane. He created stochastics. I mean, so I was kind of involved in this early on when we were kind of getting into oscillators. And Wells Wilder, all that was kind of when I started in 1980. So, thought we found the holy grail, which unfortunately, not so much. But at the time, it was pretty, groundbreaking to have oscillators. Anyway, this is trading, right? So, and I think I had something else I was going to mention to you, which of course I don't remember. But the thing about this is, learn to understand how the market works. Then you can potentially deploy other tools. But you have to build it on a foundation, in my opinion, understanding market mechanics. Why is the market doing this? What's it trying to accomplish, right? And right now, going up is not being accomplished too well. The thing we know is this might be too high, because look, we couldn't get back above it. We did discuss that. The other thing about it is we can come back because it's mean reversion. So, right? So this is too high. We may never come back. We may break from here and continue, or, you always like the or, we're back here. That's it. So I have nothing to do. This right here is a consolidation. Let's look. 8 stops, 5 stops, potential exhaustion. Not a trade recommendation. I'm showing you triggering structure here, okay? Let's watch it. And these are not trades, this is just structure. This is an auction right here. Chop, 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 right? What is a consolidation? An auction. What's happening in this structure? Exhaustion. What happens here? This is your trigger. This is your pullback to the microstructure, that little volume right there. And this is a short, except it's not a short. I'm just showing you the structure. You're going to see this behavior. For me, it has to be aligned with a location, you see. But I'm just showing it to you. You could grab a screenshot, or if you're in the Trader Lab, you can watch this later if you want. This is available, by the way, these are available to participants in the Trader Lab, in the Bookmap Discord Trader Lab, and you would have access to these if you want to watch them again. I watch them because if I rewatch this, I learn something. Not only how I, stream and how I try to take concepts and simplify them, but also because it develops muscle memory for me. And that's what replays are about. Not only research, but understanding. In other words, I need to recognize this quickly so I can be positioned, you see. Now, the thing I want to show you, now this is not a trade location. What I want to show you about the trigger is the exhaustion, the consolidation, the break, and the pullback for the entry. And you see what you had? You had the rotation. Now, the thing about it is, this trigger has to be in a different location. But the triggering process is generic. So in the Trader Lab, what we do is, at least what I suggest, and I think many do, is they take screenshots of their trades. They take screenshots just of triggers and have a catalog of triggers. They do replays of triggering structures so they can start developing muscle memory, because we don't have time. What happens is, this is what deliberate practice is about. You see? Now this looks like it's going to maybe push through here, but this is the triggering structure, and we're seeing it in a micro time frame. Are you guys tracking with me? My POC is at 3650. That's the volume point of control. This is retail, and this is accurate. Everything is reset at RTH open, so if you're not resetting, then, You guys see the behavior, right? Micro. So I use these kind of structures and this behavior for execution. Is everybody tracking? Can you see this? Just isolate this. I wanted to show it to you. What's intense? Guys, this is simple. Take those indicators. I mean, I don't, again, not a recommendation, but if this is confusing, you're obscuring what's right in front of you. That's what I found with indicators. And let me tell you about why I don't use indicators. Conflict. I don't know about you guys, but I'm very systematic. People talk about trading systems. This is not a system, but it is a process, and systems are a process. I'm just using the participants to tell me what is going on. And even then, I don't know, but I might know what might happen. And in trading, maybe is the best you got. This is an auction. This is, so, exhaustion, break, trigger, pull back short, pull back to the high volume. Let me show it to you in micro so you can kind of see what this is. And this is Bookmap is really good for this. And this is how I use it. You see this right here? Here, let me show you. This is called the chart volume profile. All it's showing is the volume that's here on the chart. Here. Right here, this is a high volume node. And remember, this is like going to that convenience store 10 o'clock Saturday night for that desperate pint of ice cream. There's a retail price, but in the convenience store, there's not a huge amount of transactions. I mean, you know, there's a ice cream for sale. There's going to be a retail price. If they raise it up, the buyers won't pay for it. They'll say, get out of here. It's too expensive already. If they give you a 50% off on the second pint, you might, if you're like me, you might go for it. So basically, buyers and sellers in a limited convenience store. Here's that auction right here. You see this? Right there, 1,138 contracts that traded right in there, top of the arrow, which is in here, is retail. Now, I don't know at the time what it's going to do. So watch. Watch. So I'm looking for an outside edge. So 40 stops, 3, is it here? No, 59, 10, bang. Now this looks exhaustive and extreme, and here's the other key to this. Less buy stops. So who are the buyers? Is it buyers getting long, or is it just retail traders getting taken out? To me, it's retail traders getting taken out, and I'm looking for an outside edge. So let's look in a microstructure. So the volume is here, and I don't know. Remember, I know I don't know. You know I don't know, so we don't know. Break, exhaustion. Now, where do I get involved? Here, maybe. Let's see. I don't know. I don't remember. Where's it go? Okay. There. That's it. Now, I'm only showing you structure, okay? But this is very, in my opinion, again, it's just me. I'm a little, have a little bit of a bias at this point in my trading career. This is an auction. This is your convenience store. It's too high. Once you break away, it pulls back. It's like checking this price. Was this really too high? You can narrate this. Yeah, we're not paying that. We're out of here. I'm going to the other store down the street. Here. This is as hard as this is. Now, random? Yes. Do you got to know what's going on? Yes. Do you have to understand context? Yes. Do you have to have discipline and have a trading plan? Absolutely. If you don't have those pieces, not so good, in my opinion. Can you develop them? Absolutely. Where are you going to find this information? You can get started in the Trader Lab.
Anomalous event.
Okay, let's watch the behavior right here. Right here. We're going to watch behavior. Looks like we might rotate up. Not a recommendation. Let's just see. Okay? I hope you're getting something out of this, and I hope it's worth your time. That you can see something. Business Beyond, when it comes to discussing trading, and I've been doing this, you might say, for a while, if I talk to my wife, I don't know. All of a sudden, her eyeballs roll back in her head, and there's drool running down her chin. So I think that's a sign. You can't discuss this with anybody, because the common thing is you're a gambler. I consider anybody who opens a business as a gambler. So, because you're gambling that you're going to not go out of business before you make a net profit. Losses are cost of production and overhead. It's not whether or not Tom is a smart guy or not, or is a winner or a loser. It's about a business plan. You see, I recognize the behavior. So, and this trade is over, right? Because where are the stops? Think about this, right here. Where is it going to go? Probably for the stops. Why wouldn't it? If your stop's sitting here, do you think you'd be picked? Here? Here?
ES.
Possibly.
Anomalous event.
So once this is doing what I see here, I'm not getting involved now. This is done. And the reason I think like this, retail trader behavior. Where's their stops? Above these swings, above these swings. And what happens is they feed. In other words, it becomes a cascading event. Of course, I don't know how high things are going to go, but you don't see me getting short here, and you don't see me getting long. What you see me doing is visiting with you and trying to give you some ideas. And then where's the mean? Isn't this it? So this is micro time frame, same behavior as this, but in a micro structure. This is the developing daily time frame. It's like, think of those Russian dolls, you know, and I never say the name right, so I refuse to assault it. Madrushka doll, who's going to help me with that? I don't know. Nobody's going to help me out. Madrushka doll, right? Anyway, you know, it's fractal. So what this is here is a fractal inside of a fractal, which is why I can't take it. But I wanted to show it to you because this behavior is the same, watch, as this behavior, except this is not a short for me, right? So it's the same. So if you can, okay, watch this behavior here. Stops are sitting here. So when I think about this, I cannot step in front of this. Now this right here could be a short. But it can't be for me because of the stop sitting up here. If you're an algo, what would you be doing? Where would the stops be and how would you, as an algo, want to use it? Now, it doesn't have to get above here. And it may push off from here. I know that. But I cannot execute in the middle. So I have to be willing to let this thing potentially come down, take the low out, and keep going. I have to be okay with that. I can tell you there's some yelping when that happens, but it's my trade plan, and that it's not about one trade or one rotation. You know, in trading, it's a business. It's about many, many, many thousands of trades. And if you take that perspective with this, and you manage your FOMO and all that attachment to dollars and all, you're going to realize that it's a matter of not doing what other traders do. What retail traders are, they're triggered by stuff like this. Oh, it's going to go down. It's going to do this. I can't do anything here. So I just sit. My objective is for it to come back outside and take everybody out who's short. And then see what might materialize. And what do we call that? Mean reversion. So it can come out in here. I'm not saying it will. I have no clue. If it doesn't, I have to be okay. Because in the end, it's not trying to pick any of this. It's waiting for others to be taken out. What I think about, and write this down if you haven't heard about this, think like a retail trader. Don't act like one. Where would they do? Where would their stops be? Here, here, now up here, and above here. Is this logical? Yeah, Matrushka doll. Thank you. Patrushka, Babushka. Wow.
S&P by stock 262.
Baba Booey? What's that? Oh, Babushka. Matrawushka. Oh boy. They're trying to help me out in the Trader Lab. You know, I don't try to say this because I make trouble, you know. So we'll hang out, okay, guys, if you want me to do that, or we can kind of turn it off now. Are you still interested? Do you want to keep with this? What do you think? Okay, you getting something out of this? If you are, hit the thumb up on the YouTubers. I'd appreciate it. Matrushka doll.
Anomalous event.
Everybody's trying to help. Thank you. Okay. All right, let's watch behavior here, right here. We're still leaning a little bit up. Watch the behavior. So I have nothing to do, right? So you have to think, well, not have to. I suggest you think like a retail trader, you don't act like one. Where's the stops going to be? Probably up in here, right? So now, what's my situation? Isn't it mean reversion? Isn't it? How far out can we come? Where's my fuel? It's here. This was the last auction that was too high. That node sitting right over there. So I got to watch this and look where it is. So this is not, now I have to tell you, if I don't get involved, I'm okay with it. I'm going to tell you I have feelings about it, but it's not my job. My feelings are not part of trading. They are stimulated by trading. They are not part of trading. They have to be left at the door. And in my trade plan and in the Trader Lab, if you look at some of what's posted by some of our members, getting your mind oriented to the job is part of your morning preparation. I have to do that. I have a mental notes section that I read to kind of put my head in the right place. Otherwise, I can kind of be in retail. I could be not mentally in the right space. So I have to do that. Watch this over here. Now, notice the reaction to it. Now, this is not a reason to get involved in the market, by the way. This can very well just be spoofing to get retail short, and then they pull, and then they come up from underneath. I'm just saying that's why this on its own, in a vacuum, is not necessarily anything you want to mess with. Let's watch the behavior. This is potentially spoofing, algorithmic behavior. Not that anybody would do anything they shouldn't do, of course, but see what's going on right here? So there's a lot of volume being done here. This is where, quote, retail is. The thing about this is, if this is too high, then we come down again. I don't know, but I'm not outside. I can't do anything, right? So let's watch this behavior. If you got short in here, this is your obstacle. Right here. So I have no range. I can't do anything. Now, if this was down here, I might be getting short because it's mean reversion, right? Outside. I'm not outside. I can only hang out. Watch the behavior against here. See? Interesting, isn't it? Huh? If you understand the auction, you know what's going on here. Too low, potentially too high. We can break from here and keep going south, right? But this is the area to check. Microstructure. And I have no opinions. I know I can't get long, so tourist. But this is too close. So I can't do anything here. For me, I need more range. So now, what can it do from here? Anything. So nothing to do. I think you'd find it interesting if you haven't come to the Trader Lab. I think you'd get a lot out of it, really. Because once you understand what's going on, or at least why, I think it's not why two lines cross over each other. That's not trading. You need an understanding, I think, of why the market's doing what it's doing right now. Once you have that understanding, I think you can kind of navigate it potentially differently if you do the work and practice. And you might have to change your beliefs, which I know isn't easy. And it's almost like when you learn to ride a bike, you have, maybe some of you had training wheels. Well, indicators to me are like training wheels, except they don't teach you how to ride a bike. Of course, this isn't a bike. ultimately you got to get rid of the training wheels. I think of indicators like training wheels that kind of crash, keep you crashing your bike because they're not in alignment. If you understand how the market works, think what you might do with an indicator once you can differentiate the behavior of the market, the condition of it, and then how to operate. I think you might do better. Well, thanks, Ward. Thanks for being here. Ward, are you part of the Bookmap Discord Trader Lab? Yeah, Moonwalker. Shorts only. At least, not a recommendation, of course. Yeah, but shorts only. This is interesting here. Check, pullback, too high. Watch the behavior right from here. Not a trade recommendation. This is interesting right here. Watch. So look, too low, too high. This right here is important. I mean, obviously you could do anything, so that's not the point. What is it suggesting? Too high, too high. So potential. And again, all you got in a trade is potential. Now look at the range. I can't use a shoehorn. So watch the behavior here. See what happens. Potentially south. Let's watch. See what happens. Now again, don't think I know. I don't have a clue, but I have a hint. Let's see what it does. Now it can do anything, so think about what creates this. If this is retail, too low, too high. Checked, too low. Checked, too high. One side is going to become retail. Is this too high or is this too low? It's like a little fight in high volume. Let's see what it does. It's either, now remember, it's going to squeeze outside edge or fail from here. Let's tour together and see. And these are not recommendations. We're just trying to observe auction behavior. And now the thing with the auction is, if I can interpret it, I can potentially know, and again, potential underline, past performance not indicative of future result, when it's changing. And then I can act, as they say, act accordingly. So we'll hang out and we'll see what this does, okay? But you're observing an auction taking place. And yes, it's chop, but what creates the chop? It's the participant behavior. Is this still too high? Is this too high? In the develop, see, this is fractal, short time frame, too high. Too high. Is that too low? Is this too high? And it's going to come out of here. And when it comes out, it's going to give us that information. If the trend is down, I would say there's a probability and not a recommendation that it's this. But let's observe. Are you guys with me? Oh, good, Ward. I find the stop iceberg detector, and all this is, so you see these buy stops, sell stops, icebergs, sell ice, right? Buy ice. For me, since I kind of depend on other retail traders as part of how I navigate, because I, having been or am a retail trader, see the behavior, guys? If you understand the auction, you know this was, I'm going to say, underlined, possible, right? Can you see why? Is everybody tracking? This is going to be, this is available to Discord Bookmap Trader Lab participants. This recording will be available. So if you're part of that group, you can review this. I review them, because you know why I review them? I want to do better. You'll never stop wanting to do better. You never get to a place of comfort. Think about any professional athlete or anybody, a competitor. Do you not practice? Do you not do films and watch yourself? What does it take to compete against the brightest minds on the planet? We're talking quants. We're talking PhDs in math and physics. That's who you're competing against. If you don't know that, it's time you do. What can you, and they exploit retail trader behavior. Well, I figured that out, and I said, I want to think like a retail trader, but I don't want to act like one. I don't want to do what they do. Maybe because I did what we all do. Sell the mid, put my stop behind the mid or the VWAP, all the usual stuff we all do, right? How else do you figure it out? You don't. Except my stops would get taken out at the mid, and I was kind of mechanical. I had no idea what context was, you see. There are times when you can trade the mid, and a lot of the times you can't because of the context. I had no concept. I just traded, it's the same, one size fits all, right? Same as your indicators. And at some point, I kind of figured out that, no, there's something different here. And in fact, maybe I shouldn't be selling the mid until they take stops out if it's in alignment with the context. If the context is two-sided and we're sloshing back and forth over the mid and the VWAP, then it's two-sided trade. I shouldn't even be trading there. But I can trade into there because of retail trader behavior for scales when I'm on the other side. Isn't that interesting? And can you guys see what happened here? Right here is the auction being demonstrated. I hope you're getting something out of this. So could you do anything with this? Here's the thing about the auction. There's a story, and it is giving you real-time input. Too high, too low, too high. And what did I say? Not that I'm right. It has nothing to do with me being right. It's all random. It just as easily could have gone up. Don't think I know anything. I'm just trying to dance with it. I am reading what the participants are telling me. And then again, they can change. I mean, it can all, this is trading. So what are the participants saying? Exhaustion, 4 stops. This is, see, 150 coming up. Rotation, only 4. Potential exhaustion. Where's the buyers? Nada. Break low. This is your trigger. Now, I don't know. It's not one I would, in the Trader Lab, we don't discuss this location. Whether, what I suggest, and again, I always have to say, and I'm required to say this, past performance not indicative of future results, is that you get, see, the thing is, if you have a structured trade plan, your job is to kind of build your business on a structured trade plan. As you build your business, and this takes time, and we're assuming if you can do the job, and not everybody can, believe me, the failure rate is still high, no matter what you do, and there's a lot of reasons for it. Emotional states are very difficult to manage, and you guys have been doing this, you know what I'm talking about. It's the great derailer. You can have the best trade plan in the planet, and if you can't execute it, then what's the point, right? You can't. Well, if you find you can't manage or deal with the emotional state and create a process to manage it, there's more to it, right? And modify your behavior and responses to those chemicals, you're not going to succeed. But you'll never experience it until you put, dollars on the table, because then you're going to be triggered. That's why you got to start in sim and create statistics to keep yourself calm. Without statistics, every trade, you're going to be triggered because you're going to have less confidence. And it's hard enough, What's hard is the emotions. It's not trading isn't, you know. Once you can understand what's going on, it just makes sense. Now, what happens? You know, that's your flip of the coin. So here, this is how I use the stop iceberg indicator. I see exhaustion, and I see this is an auction right here. Now I'm sitting above this thing, so you know that's a problem, right? Depending on your trade plan, of course. Break is a trigger. Then what? Here, then, is this still too high? This right here, and now this is a different configuration. I don't really go into this in the Trader Lab. It's advanced. That was your level against this level. So this high volume node here is your over-under. So around this high volume. Your short could be against here. Nobody gets in there. You'd be in over here. So your stop would be from, let's just say, 47.50 to 51. 51.5. So it would be 4 points. This is really where it fails. So initially you'd be here. Stop would be above this volume. Once you break, your stop is above here. You get your scale. You'd be risk neutral. Your stop would be up above here, and you'd be hanging out. That's it. Advanced, not something we talk about in the Trader Lab. And if you are in a hurry, you're in trouble. You must slow down and create a deliberate trade plan and develop the discipline to manage your emotions with a vetted trade plan. And then your job is to show up to work every day, put your plan in play, try to get aligned with the context, accept the randomness of this and the fact you'll be stopped out trying to get in location. That's just the real world. And instead of being a loser, you are it's just statistics. And it's overhead cost of production. It's important in your trade plan that you remind yourself that all businesses have overhead and cost. And like any business person, at the end of the day, do you get a net profit or a net loss? And you know in business, there's some days you don't make money. There's some days you have an expense. You have something, an outlier. It's just part of business. So you have to take it in a large sample size, not in a micro, gee, how did I do today? You know, obviously you want a positive outcome. We know that, you know that. But there are going to be days where you can't get in alignment because you have a trade plan and the market doesn't care about your plan or my plan. But then there's days you can get in alignment with it, and those are the days. And when you ask yourself, well, what's different between this morning and this afternoon? It's the context of the market. And that's it. So it's not more complicated. So it's, you know, the thing is you need to cover in your trade plan these different elements. Psychology, preparation, you know, look at the ETH, look at yesterday's RTH. What did we do? What didn't we do today? We couldn't squeeze. Well, if you can't do something, then what? You know, and write this down. If this, then that. If not, then what? If we have this, and we break down, we check this, if this, then that. If we can't get back above here and here, then what? Then that. Say, that's it. If this, then that. If not, then what? If we don't take these guys out, then what? Then potential back here, and then south. Why? Out of balance, below the volume point of control, going south of the border, and that's your trade. So, but this is not a trade, this is something a little different. I'm showing it to you, and again, these are not trade recommendations. I want you to see how you can slice and dice and stay engaged and then potentially get in alignment with the market. It's then up to you to determine the range required for the risk you take. So if you, now this is an obstacle, right? So maybe you can't trade this per your plan. But what I do, I may not take this trade, and whether I do or not is not material. What is material is the discipline to not take the trade if that's your plan. You don't make them up. If you're going, I'm going to do this. If it's not your plan, it's not your trade. You should, hit yourself with a 2x4. Your job is not to make trades up. Your job is to stalk and wait patiently. Wait patiently. That's your job. If you can't be patient and your emotions and the adrenaline is triggering you, that's a problem, and you have to fix it. And I mean have to, because you won't survive it. So these are pieces, and we discussed these in the Trader Lab. I would encourage you guys, if you haven't come over and visited, at least that you do, take advantage of some of the tools and the camaraderie and the great work that's being done. I'm really proud of these Trader Lab participants. They're doing the work. They're posting their trades in the sense of screenshots, circles, arrows, same stuff I did with my PDFs that are available to all of you, that are pinned to the top of the Trader Lab. And they're taking advantage of the additional education that Bookmap provides for Discord participants, and you don't have to subscribe, to Bookmap, or you won't be solicited. I think it's amazing. I've never seen anything like that, and I'm actually very pleased to be part of it.
Yes. Anomalous event.
Okay, watch the behavior right here. Watch this behavior. This is a price check in aisle 3. It's not a trade recommendation. Watch the behavior. We're just going to watch, right? We're tourists, correct? Now, where's the stops? Let's come back and think like a retail trader, but not act like one. Where are they? Here and up here. So let's see. Now, remember what this can do. It can come here, check, and be repulsed, or even here. But these are not trades. We're just tourists. Because I'd like you to see how the market behaves. And remember, we don't know, but you need to be thinking like a retail trader. So this is still mean reversion. So where's stops? Here, here. Let's see what it does. Interesting, isn't it? Let's watch. I'm looking. Now, these are not trade recommendations. Let's watch the behavior. Pretty interesting, don't you think? So I'm a tourist, don't forget. I label these, I call them variable high volume nodes, and all they are is what was considered retail previously. So I want to know where this is. Is it still too high? That's this level right here that we checked over here, and it was too high, right? And there's your selling. We come back to the high volume in here. Now, I have no idea, but I know this was too high. So the potential is to come here and rotate. And again, I don't know. And this is the level that was rejected, that was too high. So if getting involved in here, and this is very micro, these are not of course they're not recommendations. See the book? This is my over-under. And there's nothing to do, but I want you to see how it works. Because for me, I still need, based on what we discussed in the Trader Lab, outside to come back here. This is the same behavior using a tweezer. This is why, if you can understand the auction, you can transpose the microstructure on top of the developing time frame to get the range. So what I try to do, underline try, is to get these outside edges in the developing time frame so I can get range. So what I'm going to do then, potentially, is use microstructure auction, like that Matrushka doll. And apologies if I offend anybody who's Russian, to get outside for this. So I want to trade this because it pays if things work. But I'm going to use this structurally to try to get into a micro time frame for execution. Does that make sense? A 2x4. Yeah. Let's see. Any questions, guys? And, I know I'm repeating this and I apologize, but I know in YouTube, guys come and go from the stream. If depending on how long you've been in today's stream, if there's an open invitation for you guys to come to the Trader Lab and Bookmap Discord chat, take advantage of the tools. Here, watch this behavior right here. See this? Watch this. We're just watching, right? We're observing. Algo behavior right here. Watch. Price check. Watch. Don't know what'll happen, right? Trend down. Outside edge. It was too high. Now, there's not a lot of space in this. Do you feel lucky, as Dirty Harry would say? You guys know Dirty Harry, don't you? So this is, I marked, this is my outside retail price that was too high when we checked it over here. We come up, we exhaust. Now, unfortunately, this, is an obstacle. So let's see what it does. Are you guys tracking? Yeah, a thumb up would be nice. And if you have any thoughts or comments, throwing that in there would be cool. I would appreciate that. I don't get comments. I don't know. So a comment would be nice. So do you guys see the logic in this? This is the auction. Right here. Too high. Oh, too low. Too high. Where to? Here before it gets there. Why? This is the auction. What did the market tell us? The participants. Remember, the participants. Too high. Let's check that price, Louis. Let's go and check that. Is that really too high? That's what the market's doing. Is this really too high? Yeah, it is. Now what? I don't know. Down? Maybe? What do you think? And here's the other piece. See this? That's pressure in the book. And watch below. So this is algorithmic. But this didn't hurt. So if you get a sense of this, we're talking that Matrushka doll thing, right? There's the higher time frame. I mean, the real higher time frame, RTH daily candles call them. I used to call them bars before candles, but Then there's the developing time frame, which is this whole thing, the whole day, and where all these levels are out here. This is your auction, too high, too low. Then there's microstructure, this stuff. It's the same process, except it's in this space versus this full space. Then there's these levels that are created by the participants, right? So price check. Now we take this out, we squeeze. We know that. And that's what a trade is. It's like maybe. But I want you to observe the behavior here. It's not, let's just say, it's anticipated. What happens? Clueless. So watch this. This is algorithmic behavior. He's starting to pull. It's going to open the door. Watch. Now, I don't know. Remember, I don't know anything. Stops are above here. Stops are above here. So let's observe. But it was good to see this, don't you think? Now, this is, again, a problem for me, but it could be a short. But you're really trying to work with a tweezer in this. For a structured opportunity, I want outside, because this is where I'm trying to go. This is saying in the microstructure too high. See? But is this too low? Outside, mean reversion. You see what's going on? So I don't know what it'll do. Don't think I know anything. I truly have no clue. I stay in the I don't know mode because it's not my job to think I know. My job is to just try to dance with it. That's all I got. And then pay the price for discovery if that's my trade. So now, where's my trade? Not a trade recommendation. Stops are here. Outside edge is going to be up in here. Yesterday's low, remember, let's watch. Get over here. What you got to watch for is squeezes and then exhaustion. And with mean reversion, you're looking for outside edges back to here. So let's look. I mean, you could end up with a lot of trades trying to do this, you know, and stops, right? 158 stops, 48, 51, 10, potential exhaustion. Now, if this is too high, then back here. If it's not too high, we continue up. And I couldn't tell you. That's part of the thrill of trading. Let's watch. So part of this is also thinking about where's the stops. Well, if we have swing highs, aren't stops typically sitting over where the swings are? Paul, thank you. That's a great compliment. Paul, are you in the Trader Lab? 20 plus years, and I'm glad it's helped, Paul. That's music to my ears. The thing we have to be thinking about is this, because there's going to be stops here, and it's an outside edge. Now, the thing with the mean reversion is there's no way to know. That's the hard part. You didn't think this was easy. It's not complicated. It's random. So easy is not the right term. Simple, I mean, this is not complicated. What is like every trade, it's random. You know, are we going to get there before we take this swing out? That's like the question. Chances are not so much. There's nothing sitting here in the book. See the stops? Okay, let's look. This is our area now that we're going to be observing. I'm going to look to the left. I want to make sure that I know where the swings are. Write that down. Where's the stops? So there. What else? Let's go a little further. Up here somewhere. Okay. Got to get to a little higher time frame over here. This is what I use in other charts for. It's like, what's going on here? Okay. 3669. We are coming over the outside edge of this consolidation. We're into the range. Stops are sitting above here, and we're going to observe an outside edge for potential mean reversion, not a trade recommendation, right, guys? So we're just going to see. It can do anything here. Let's watch. Whoa. Come on. 500 stops. That's sweet. 300. Watch in here. They're pushing from the bottom. We're just watching the behavior. 68. We're inside of yesterday's range. This is the squeezeteria. Let's watch. This would be a target coming down if we're going to go south. No idea. So let's watch. See, this is how mean reversion might make some sense. Watch. Now, it may not come to fruition. You know, we're inside yesterday's range. So now we got to look. This is short covering. We want to look around 36.70. We want to be looking around 67.70 in this range to observe. These are not trade recommendation, guys. Don't you dare.
S&P by stock 294.
We want to watch up in here. You notice what the book is doing. This is algorithmic behavior. They are pushing it into our stops. Watch this behavior out in here. Okay? This was the retail price from yesterday that was too expensive. So we're watching this behavior right here.
S&P by stock 256. S&P by stock 251.
Patience is a virtue, right? Did you guys ever hear that? So we're just going to watch that 70 area and just see what might happen up there.
S&P by stock 259.
Not a recommendation. We're just touring, right? Still a lot of stops going off up here. So just relax. Again, this is not a trade calling room. So we just have to kind of keep our, behave. Remember, 70 was kind of important. 69. Potentially, we have mean reversion that we're just looking at, right? The volume point of control is below us. So maybe, underlined, we can return to it. Let's see. No way to know. All you can do is be a tourist, right? Is everybody with me? So the idea would be, which would be nice, would be for these guys to pull down here and for this to come down. Let's see what it does. We don't want you to pull. We want you to pull, in theory. And again, not a trade recommendation. This is the outside area, right? So this outside for the potential to return mean reversion. So we'll see what it does, right? No idea. Algos are pushing it. So let's see what goes on here. This, if this could come, this guy will come down, these will come down, and this pulls, it opens the door. Think of it like a hand pushing it if these come down. And if this pulls, it's like opening up the door. That's how I think of them. But I can't do anything with them. I have to trade my structure. So my structure, right, mean reversion. What is good about this, no matter what happens with this thing, is that you're seeing it, and you're seeing the auction. Now, what will it do? I'm giving you the I don't know, and that's all you get. I don't know. So let's watch the behavior here, okay? Can do anything. Are we going to come back under yesterday's low? So let's think about this. If you're going to scale on a short that potentially might have happened, you're going to, come on. Sometimes you want to just slap it. Okay, gotta watch this. So this area here, this outside edge, you see, is kind of your outside edge of this distribution. This is the higher time frame. So under here, potentially back here. And if we get under there, let's go take a look. Back here. So this is the target. Theoretically, not a recommendation. And anything can happen, right, guys? You know, I'm not calling trades. I'm just kind of sharing some ideas. So yesterday's low, potentially, right? And come on. You know what? I'm grunting at it because you know, mentally I kind of narrate these things, so I like them to work. I feel better now. Okay. Where am I? Okay. So now, in theory, since we were looking for outside in, mean reversion, the trade would fail around 68-ish, right? And the target is the VPoC, which is down around 47.5, right? So that becomes the location, and now it's helmet on, and you know, this is not a trade recommendation. This is all structural, based on auction market theory and using the volume profile. Anybody have a question? Oh, Genevieve, thank you. Genevieve, are you part of the Trader Lab in the Bookmap Discord chat? Never put ketchup on a hot dog. Floyd, we don't do that here. JJP, let me put the link in the Discord chat for today's YouTube. All you guys who are members of the Bookmap Discord chat, you can watch this again. Great watching. I even watch them. Sometimes I throw a shoe at the television, but basically they're okay. There you go. So that's there. Grab the link. Yeah, Dirty Harry. Oh, what are we doing over here? Now, the worst that can happen if you took this trade and followed the trade plan is scratch. Let me make sure I'm in the right place. Yeah, actually, scratch and a burger. And if it takes you out, that's just one of a bazillion trades in a career. That's all there is to this. Nothing more to it. So where do we go here? Let me look at this. Came down to this liquidity.
508.
Okay. Now, here's the other thing. If theoretically, if I was short and I get taken out, it doesn't change what I do. All it means is, because it's mean reversion, this is still my target. Nothing changes. The thing is, in trading, the rotations are random. So this is my micro high volume structure. It's right there, that little node sticking out. So if we stay below there, all good. If we take it out, then we're going to get these guys out here, including moi, if I was short. And then that's okay. I just, next trade. So that trade's going to go to the happy hunting ground.
270.
And that's okay.
S&P by stock 286.
You see? So for me, I don't, you know, a lot of guys, now we're not done with this, by the way. There's more out here. Not a trade recommendation. Let's observe it. Now it's getting a little late in the day, so we'll see. But this up here potentially could set up a, now remember, low volume, outside edge, stops are sitting at the VWAP in the mid, okay? So, and now we're playing with this too. So we have to be very careful over here. See all the stops? Thank you. Mine is in there too. Pretty exciting. This is when you get the rotation and then you get a couple burgers out of it. That's just the way it works. So it's still, now, but there's stops here, so you can't forget what's sitting here. If you get short, you're still in the location, but the stops are here. So remember, think like a retail trader, don't act like one. So what that means is, if I know retail stops are sitting here, do I want to run in here? Now this is a location, but this is vulnerable. So I have to be very cautious here. Not a trade recommendation, we're just tourists, right? So we want to watch an area. And if it never gets there, then, you know, it's back here. This is where the trade objective is, and then potentially lower. So we will see. So the mean reversion idea is to pick the stops and then come back here. Now, where is that? You know, good luck, right? $600 stops, 18, potential exhaustion right here. Let's watch. This is a tough area. They can get you in here and they can fool you. So this is dangerous. What they all are, I guess, but you know, in other words, it's easy to get in a short here and then get squeezed. So it's got, but you know, see this outside edge? So this is an outside edge, so you have to just sit back. Not a recommendation. But I will say, subject to what happens, this is where I might be going. Remember, mean reversion, context down. The fact we're in yesterday's range, not the end of the world. What's the end of the world or is this? So we have to just be patient here. And then you have to have a trade plan for this. What do you do about this? Do you do nothing because of this? Or do you use this location here? See, there's your question. Are we outside far enough, or are we going to continue squeezing? Tough, tough question. So, tourist. Watch the behavior. You got a selling iceberg right there. When he's done executing, you got to see what happens. These are not trade recommendations. We are tourists.
Iceberg ES sell 400. Iceberg ES sell 400. S&P sell ICE 503.
So watch.
S&P sell ICE 506. S&P sell ICE 502.
The fact there's icebergs there is not a reason to engage. If we see them, everybody else does. Now, we don't know what the reaction will be, right? Watch the algo coming up underneath. He may just want to be pushing it up into that iceberg. You don't know. So let's watch. Remember where the stops are. VWAP, mid. This is a funky area. I mean, this could be the area right here. I cannot read it in the sense of I have to be conscious of the VWAP. I do want to be looking at mean reversion. See, the thing with this is the 70 is the area. But we've got problem with that VWAP. So there might not be anything to do. I'm not saying, because I can't call trades, of course. But it's an area to observe. That's kind of how I think of things like this. Area to observe. So I'm just a tourist. Let's watch. We still got that iceberg sitting up there. Let's see what goes on with this. Are we going to get up into that berg or not? Very tricky. I'm just focused, guys, so I'm not saying anything. I'm focused. This is where discipline comes in, and also being willing, if this thing doesn't get above this 70, to just deal with it. I'm seeing both sides active in here, so it's kind of funky. Watch the behavior. You can kind of see the both sides are active. It's funky. So anyway, for me, I'm just patiently observing. That iceberg is still looking to get filled up above. You see the liquidity sitting up there at 70. 70 is important. It's where the volume point of control was retail yesterday. So it's meaningful. We broke down. Remember, that was a target coming down. We're below it. Retail price. Potential to squeeze. So we're kind of like in a funky area. You know, it's like you're dancing with a fire pit right here, you know. So we just are going to observe it. You never know. If you're in the... okay, I got to concentrate now. The Bookmap Discord channel, Trader Lab, pinned to the top are where you can download those 60 PDFs. You'll see PDF Tom B. And then there's that video up there also you'll see. And some other stuff that you should take a look at. And then I have on YouTube trend day configurations, you know, different things that you can look at. See, we're back up into that iceberg. Let's see what happens over here. Didn't execute yet. So we're watching, right? We're watching. So this is the behavior that we want to be conscious of. This.
30 seconds till news event.
So watch the behavior. Remember, if this thing rolls, it's back to VPoC.
20 seconds till news event.
Not a trade recommendation. We are just watching, right?
10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Event has occurred. ES, anomalous event.
By the way, guys, if you want to reach me, I'm not able to respond to individual messages.
Stock ES sell 330. S&P sell stock 382.
So this is mean reversion. Yeah, Nick, that I really can't hang out, but you know. Here's the thing about the auction. What did this mean? You see, if you can think of it that way, if that's too high, then let's come back and check. That's why this is mean reversion. So this is the potential target on this one, not a recommendation, right? So we identified the location. We identified the potential squeeze. This was a bit disconcerting to see this thing over here. They're still in here. It's pretty amazing that they didn't cancel it and move it down. So that still might trade, but this is the target. So nothing to do unless you're in from that location. So let's observe. Remember, mean reversion, right? This has been what we've been on all day since we got into a trend configuration, right? So let's watch. So if you were able to get in here, you'd be risk neutral, right? Remember the two lot configuration, and this is your next target. If not, then, you know, there's nothing to do. Let's watch. Let's see if this can get back to VPoC. So let's watch. So we have this break, pullback, break, pullback, break, pullback here. Let's observe. Now, if it comes up here, it comes back here. If it breaks from here, then potential here. That's about as complicated as this is. No idea, of course. See the behavior. This is your high volume area. That's your outside edge. This is nice to have. This is the target, not a recommendation. We're just, who knows, right? Isn't it just maybe? So now there's nothing to do. We're just going to tour, right? And we'll see this through one way or the other, and that'll be it for me for the day. So if you got something out of this, if you got, anything from this that was useful, I invite you all to come to the Bookmap Discord Trader Lab, where we work on this stuff. And like everything in trading, it's at best it's maybe, right? And you can see that it's maybe. But at least you're seeing a potentially consistent application of a process that's based on auction behavior, market mechanics, rinse, repeat, same process, you see. So it's not about complexity, it's about simplicity. It's about understanding why the market does what it does, how it tends to do it, and what might happen, right? Might, because all you got is maybe. And either we're going to squeeze, right? Take this and maybe even come up here. Or before we get there, get here. That's it. That's it. Nothing more. And the reason we came out is to check this, potentially. And if this is too high, then we can check that. That's kind of how it works. So let's see. Well, I've only got so much time, and I'm trying to kind of do my own thing here a little bit, if you know what I'm saying. So, and I typically have a hard time multitasking. You know. But, some days you can, some days you can't. Oh, algos, see them? Now the algos get active, around this time of day, and especially 2:30 Central Time. They get more active. So we'll have to see what this behavior is, right? Notice they're pulling right here. They could be opening the door. Still got that iceberg sitting up there. They may push them. They may push it up into that iceberg. They can do that. So we'll have to watch that behavior. So we'll see. Here's an iceberg in here executing. Let's get this guy here, open him up a little bit. So this can still go. and no idea. I mean, my preference naturally is this before that, but whatever, right? So we'll see. Let's just watch. So I'll stay in here until either yay or nay, as they say. What is it like in the Roman times? Thumbs up, thumbs down? Don't you feel sometimes it's like that? By the way, let me see. I'm trying to think what day today is. I don't even know. I think it's Tuesday, right? Why is that your preference? Peter, I'm not sure what you're asking me about my preference. Yeah, gladiator. Yeah. So now the thing is, if I was to ask you guys what's going to happen first, take out 70 or get to the VPoC, um, what would you think? I mean, just ask yourself, what's happening first here? VPoC? This is the primary target? Or this? And then squeeze. Lower first. Okay, Peter. Richard, are you in the Trader Lab? 3670. Well, thanks. You're not helping me. Laura? Yeah, drum roll and dice roll. It can do anything. So for me, it doesn't matter, other than I'm rooting for the team, right? But I have no control over this. My only control is my location based on how I interpret the potential. And as long as we're below here, which, can change, this is where I'm headed, hopefully. And it's not a trade recommendation because like any trade, it's, I don't know. The thing in trading, I think, is to release yourself from needing to be right because you have no control over the outcome of the trade. You only have control over where you interact with the market, how you manage your risk. That's all you have control over. The rest of it, you don't have any control. You know? 46. Um, I think that's the risk of finding out. I'm trying to stay aligned with the trend. So if we leave something behind below and we can't get back above an area, which doesn't mean we won't, then my assumption is my probability is more that we get down to that VPoC than we get up above 70. And again, I have no idea. I pay the price for that discovery. That's kind of how I think about it. Yeah, Peter, we are the fleas on the butt of an elephant. We absolutely are. Because we don't move the market, really. It's, you know. But it'll be interesting to see if this thing does anything, right? And they can squeeze. There's shorts in here. That's just life. It's trading. It's one trade. And the thing about everybody wants to be right and, win. And I mean, of course, right? But that doesn't have anything to do with really in trading. All trading is trying to get aligned with whoever might be. And there are times when nobody's in charge, it's rotational. And then there's other times where we have rotation, but the rotation might be weak hands, buy stops creating these rotations. And then the dominant side, which are the sellers at the moment, maybe still, don't know, that we want to try to maybe align with that higher time frame, which, as you guys know, is short. Because it doesn't mean we can't get squeezed out. I mean, that's just the nature. But, and I think 46, I hope I'm answering your question. It's an alignment of time frames. So this is my chassis that I run my trade on, location-wise. This is my microstructure for triggering behavior. This fooled me, so I did not get short here. I had to get in someplace else. And I did, and I'm still on the same trade. I'm just in at a different location, and I have to manage it and deal with it differently. This is still my target. If I was in the trade, I mean. Again, not a recommendation because I'm clueless. But this is based on the auction, the potential. And it can blow up, squeeze everybody, and then come back down. And even if it did that, I would still be working the short side. And we have a, I guess I can mention it, maybe I shouldn't, but we do have structures that we use from here back to here in the Trader Lab. You guys in the Trader Lab, you know what this is, right? That's right. This is a, quote, observation we have in the Trader Lab. That's why I was looking. So it was two locations. There, right? And then I was saying here. So I had two areas to deal with here for shorts. Turned out this was the right one, but I did get kind of confused. In other words, this was a problem for me. I was going because they didn't execute. I wanted them to execute and then see, let them release, and then see. You see, so this was what I was looking for. It doesn't mean it's right, wrong, and different. I'm clueless, but that was the trade, you know. So now we just have to sit and be patient, you know. So if you're on this thing, you'd have a scale. If you're on this thing from a different location, you'd have a scale and you'd be risk neutral. And then this is the next target, or not. This mean reversion, right? So we've been talking mean reversion, I think, since you guys came on the stream, right? Since I started, right? Is that right? It's only been one side. So I think that's about it. So whatever happens here happens, you know, and that's that. So let's see what we do. These are not trade recommendations. It's choppy, it's nasty, and we could get this move towards the end of the day. No idea, of course. So let's watch the behavior at 65. So you see the 65, and there's some iceberg wants to sell over there. And then we got that 920 still sitting up there. So we want to watch this behavior. See the algo below at 62, pushing it. See what they do if we come back down. They're adding below. You see this behavior? This skews the book up. Probably into this guy, and maybe even this, you don't know. Watch the, see the book, see the, now this guy executes. He's going to probably release, and you see how the algos are pushing it. Watch the behavior. Still got to get these guys below to pull. Otherwise, they're going to push us up potentially. There's 1,000 icebergs going off there. Let's see if we can get these guys underneath the pull. That will open it up. So let's see. Watch the behavior. So these guys need to get out of the way now and then flip. We'll have to watch, right? So we can see the order flow here in Bookmap. So we can kind of see the order behavior of the book. These guys have to get out of the way, and I would like to see selling, right? So we'll see. Okay? We're tourists. There's our target. Clueless. Interesting day, don't you think? Other than beating your head on the desk a few times. So let's see if we can get to our target. I'm growing moss over here on the mouse. Moonwalker, what are you talking about adding more at VWAP? How can you add? Wouldn't you be stopped out? Well, why would you do that? Why would you have a stop that far away? I don't understand your logic, but what do I know? For me, if it takes out my location where I originate the trade, I am out of the trade. I don't want to be in the trade. I want to then dust off and look for another location. What happens? Where's your stop? It makes no sense to me. Where's the risk-reward ratio in that? Where's your R factor, Moonwalker? Well, what are you talking about here? How can you survive having a stop that far away? Well, Slotazari, when we come to mental, you and I need to have a talk. That's a separate conversation. No, he's trying not to lose. That's the what they call the express train out of the business. In my opinion, not a recommendation. If it works for you financially, then by all means. You know, I can't do that. I mean, mentally, if it gets through a level for me, all I want to do then is be out of the trade. I don't want to be in the trade. Because with what you're doing, I think you're prioritizing being right versus trade management and running a business. If that's what's going on, quote, if in the back of your mind is, I don't want to lose, wrong, in my opinion. You want to lose smart because it's overhead. That means keep your cost as low as you can. Increasing your cost in business doesn't mean you get a profit. I mean, is that logical? Think about it. And I'm not saying I'm right. I'm not. It's what's right for me. But then you need a huge account to deal with losses that you probably don't need to take, in my opinion. But you have to, see, here's the deal. You may have a better plan than me because it may align with you psychologically, but you're going to need an account that's huge to trade that, where let's just say with me, I can trade more contracts because I have less risk. which means when the trade works and hopefully getting risk neutral, I get more shots on goal. And when the trades hit their locations or targets, I may have a better net. Maybe, right? So you got to ask yourself, why would your stop be so far away from a location that would fail? Let's see if we can get this target and I can be done. Moonwalker, don't think out loud. Put a plan together. Better yet, have those thoughts in a private place. Because I'm going to engage with you when I hear this or see this kind of stuff. And I have to tell you, I appreciate you posting it because we've all had the thought, well, if my stop is further away, but think about why we would move our stop away from a structural failure. Isn't it to be right? I mean, when you say I don't want to be stopped out, which we all don't want to be stopped out, what are we saying? You got to take it to the therefore. Therefore, I need to be right. Well, I think in trading, we need to manage our risk. It's not about being right. It's about managing our risk and limiting it to where it fails the trade. And I want to get my target and I want to be done. I'm getting annoyed. Not really, I'm just kidding. But you guys understand why this trade might make sense, do you? Yeah, they are limits. The question was about the icebergs. Yeah, they're sell orders. So this is mean reversion. Can you guys see the logic? If you understand auction, then you understand what this is. This is where the high volume is. This is where the participants currently think is a fair price. If we come out too high, we're going to run out of buyers, and those buyers might be buy stops. Remember who they are. And then we have the potential to get back here and continue or not. And again, everything is maybe in trading, right? So we don't know. Clueless. So let's see what happens. Well, Yabba Dabba, it's a rotational day. So it depends how you define chop. Yeah, it's always choppy. I mean, this, is chop, but there's structure. So how myopic do we get? I look at this stuff and yeah, it's whatever it is. But I'm overlaying on this chassis. This keeps me kind of grounded in the sense of where are we, And then if we understand the auction and what creates these levels, then we know the potential, and that's all you got. But this is whatever. But I don't, I'm looking more at the auction, which is outside in, and I did not get short here. I'm short from another location, which is not material to this conversation. But the thing about it is, I will keep trading towards this until it's broke. Because I have confidence in the probabilities of the behavior that creates this. That's what the thing about market mechanics comes from, auction market theory. Understanding the purpose of the market. All this noise, that's what it is. So what I'm trying to do, underline try, is understand what this is all about, and you can kind of get that if you come to the Trader Lab and you kind of get immersed in a thought process of understanding the market, which if we're indicator oriented, we never learn. We just are trying to find the right mix, the right tweak, the right what. I don't know. Been there, done that. Still haven't figured it out. And then, but this is the truth. Now, what it'll do, that's the old magic mystery, thing of maybe. But ask yourself if it's logical and if you can think about why the market might come back here. Just like a good shopper, think about it. Moonwalker, you're not disruptive, but when I hear a statement that is destructive, I'm gonna respond to it. And the thing is, you have the courage to say that you would sell 2 more. I'm asking you why you would be adding to something you should be out of. That's all. In my opinion. Again, this is just me. I'm not saying it's right. In fact, I want you guys to do better, so I'll do better. This is not one-sided. I'm in the Trader Lab to get better. Let's see if we can get this thing before I get too old to enjoy it. Does anybody have any questions? I mean, I'm going to stay here, probably through the cash close now. I just want to get this scale over here and then, go from there. Come on. There we go. Okay. So now I have another theoretical scale. Mean reversion, outside in. Are you guys tracking? Now I'm holding, not a recommendation. This is just my trade, right? This is Trader Lab stuff. Call it bread and butter. Call it a little bit of insanity, but that's what it is. You guys can learn this. Now, past performance is not necessarily indicative of future results. There's, this is trading. But do you think you might have an advantage if you could think a little bit differently about what's going on in here and the why? See, the why. If you're with indicators, you have no idea what's going on. So, that's the whole basis of the Trader Lab, is helping you get an understanding of auction market theory, market mechanics. This is it. Creative, it's all, do you have Bookmap? Yeah, you're right. Moonwalker is saying about the getting the scale, getting risk neutral changes your psychology, you see. It really is money management, call it risk management, and having a process that helps you deal with the psychology. And I mean the stimulus, fight or flight. I want to jump out the window. I mean, think about this. If you're sitting short, which I was in theory, you're sitting short. It does this. You're thinking, hey, here we go. And then it does this. What are you doing? My lunch almost comes up on the table. But that's part of trading. If you get risk neutral, then you're willing to scratch and then put it. I'm telling you what I do. I'm not saying anybody should do what I do. But what I do is I am always looking at structure because I know what creates it. It's an auction. If I come out above, I may just pick some stops and then fail, and that's fine. If I come out and keep going, I'm looking at the next location. Nothing has changed. It's location. It's like real estate. Well, my stop had to be a little further out, you see, because I can't get too close to this because I can get picked off. I got my target now. By the way, I always go a little bit ahead. I don't put my trade here, my limit. It's a little bit above, a couple ticks, Matter of fact, I got filled on that low tick. Look at that. Right there is an indication it's probably going to go lower, not a recommendation. Hey, Phil. How are you, Phil? Thanks. It's the RTH, Phil. So all these levels reset at RTH open. So VWAP, mid, the initial balance high and low, which is the first hour high and low. Actually, that's the low. The overnight is from the ETH. These are all statistics that have a probability of being hit during our T8 session. The initial balance high and low, or the overnight high and low, has over a 90% probability of being taken during the RTH. So I trade towards those early on when there's nothing else, when I don't have any other, structure. And you can learn about all this in the Trader Lab, It's a process, But I think we make trading too complicated. I think what you see I'm doing here is kind of simple. You guys see it as simple or complicated? Just curious what you think. Um, 9:30 Eastern Standard Time, Phil, is when RTH starts. And if you're using Bookmap, basically you just configure it to reset, so it starts a new profile here. And this is the chart volume profile. This lets me kind of get into the minutia. So this is the whole day, the daily developing time frame. And while this may look like crazy to you, it isn't. I mean, it is, but it's not. Because all this little stuff in here are consolidations, and this is the bigger consolidation. You see, that's the fractal nature of all this. And if you can kind of think in those Russian dolls, inside out. So what I attempt to do is trade the higher time frame, and that's like daily RTH. So where are we in relation? Now, we broke out. I cannot get long. I can't. There's others who can, and maybe, and that's great. Because if you're really experienced, you'd be surprised what you can do. But to get to the point of being really experienced, you have to kind of start and then deal with the discipline, which is a tough part of it, and the patience of waiting. Not our nature, because we're triggered by FOMO and attachment to money. Oh, I'm down for the day. I got to get even, right? Does this sound familiar? Well, I'm talking about me. So, so I found miraculously that if I didn't do those things, I did better. So I went, okay, maybe that's what we'll do. We'll do something that we don't do, which is patience, accept the randomness, understand that I may not get filled, or I will. I got filled right here, which is really strange. And now I'm just holding. And this is what they call the Hail Mary pass, isn't it? I'm going for this. And maybe lower. Don't know. And it doesn't matter to me. Because the primary job of a trade, remember, mean reversion, the primary job is mean. This is the mean. And it is mean. But I'm in a downtrend. I'm out of balance. Out of balance means I broke out. So it's a breakout. Balance is two-sided trade. That's balance. And then when you're in a bullet train, you're out of balance. And that means it doesn't know what it's worth. So what the market will tend to do is go, what about here? Nah, I don't like that. Here, nah, that's too high. Rotate. Consolidations. And it's a sequential stair-stepping of an auction. That's all this is. Notice we're below this. Well, this is our outside edge. So this in here is our outside edge. We came up towards this outside. This is called a low volume node. And all it is a separation between this distribution, or let's translate, consolidation. Then we come back up. We can't get back in here. Bum. Then where? Back here. Price check in aisle 3, like in your supermarket. Then what? If this is too high and this is retail, two possibilities. It's too low. Let's come back up and squeeze, or continuation. So for me, considering the trend, now the primary trade's done. It's this. Then this is like what do you call this one? The Hail Mary pass, the long ball, I don't know. But the trade is done. So now I just sit and I look for the next layer, which is down here. And no idea. So let's watch this one, okay? Who puts on a lab coat? Who asked that? Where's that? Oh, okay. It should be me, maybe, huh? VZ, I just see the behavior at the VPoC, and there's going to be front running. I front run by a couple ticks. I always leave some for the sweeper, you know. So, you know. So for me, if it comes back now and takes me out, I'm perfectly okay. It doesn't matter. It's the runner, and that's the runner. I shift the now, and this is different than what we talk about in the Trader Lab, right? Because the Trader Lab, so you guys know, the goal of the Trader Lab is to get you solid fundamentals and a market understanding and the ability to deal with the psychology and potentially create a profitable trade plan as a foundational piece, you see. And this by itself is no easy task in the sense of you've really got to do the work. It's really, quote, work. It's your job, right? Then once you have a piece in place and you can execute it and deal with the psychology, which is such a problem for all of us, trust me on this. You think trading is hard? I'll tell you what's hard. It's mastering the psychology. I mean, somebody could give you the perfect trade plan, and if you can't execute it because of the emotional triggers you're trying to wrestle with, you're still not going to, it doesn't matter, right? What I was starting to say to you quite a while back was, how we jump from, I don't know, we go to seminars. Have you guys ever done that? We buy books. We buy the latest trading program, the latest guru, the guy who took 1,000 and turned it into 300. I mean, really? That's our nature because we all want it. We want it so bad. And we think looking outside of ourselves. Well, it really lies within you. It's what you're going to do about it and what can make sense. Nobody can hand you the answer key. You really, I can't hand you the answer key. I can give you a way to think and maybe help you understand. And then you can take it and put it in pieces, kind of reverse engineer it, and then make it your own. For me, it's like dancing or reading music at this point. But I will tell you, I struggled for a long time. And that's because I was indicator based and then system based. In other words, which is really compounding indicators. You think about what is a system? It's really indicators of sorts. Conditions, if this, then that, that kind of stuff. And part of my process here in the Trader Lab is kind of built on a system. But it's systemic. It is not mechanical. It is process oriented, so it can be learned. And I kind of started doing the Trader Lab because I could transfer this to other traders. I found a way that I can make it simpler because if it's complex, we can't learn it, So I don't think complex, I think complex scares what's right in front of you, but I never thought that. I always thought it opposite. I thought complexity, that in the complexity would be something nobody else could find. Does that sound like any of you guys? So let's watch and see if this thing can get down below. All right. And it may not do it to the close or never. See, that's the whole thing in trading. It's maybe. Write that down. Maybe. Because that's all you got. Maybe. So if you can accept maybe, then you're off the hook. It's not up to you. You know what's up to you? Having a vetted trade plan. And then when the trade shows up, you put the trade on because you've done the work and you're prepared. That's up to you. This, clueless. That's why this is the primary objective. See? So that's all there is to this. Now, whatever happens, happens. If this trade comes back and takes me out, I'm perfectly okay with it. Because it did its primary job. Everybody in the Trader Lab knows what the primary job is of mean reversion. Getting back to the mean. So this could be short covering, could be the end of the day. Look where we are. Most traders I know, the pros, the guys, who do this for a living, and I do know a number of, let's just say, traders who do this. Um, they're answerable to their plan. Let's watch the behavior. So this is algorithmic. This is an iceberg. He's trying to get filled. He's still here. What's he doing up here? I think he fell asleep. Look where he's located. See, that was not maybe such a good spot to put it. We knew about this location. Maybe he didn't. Or maybe we're going to come up here and he's going to get filled and we're going to come all the way back and squeeze. Do you know that's possible, right? I have nothing else to do. So the thing about it is, all of this is maybe and random. What should not be random is your trade plan. Your job is, first of all, to vet a trade plan and know you have a statistical edge. And basically what you do in trading is you are executing when your edge shows up, and that's your job. Other than that, your job is to be a tourist, hang out in the trader lab, order pizza and have lunch with me. That's kind of your job. But other than that, this is what we do. I don't know if this is boring. I don't know what you think of it, but this is what trading is. And managing the emotions, having a risk management plan, rinse, repeat. Mean reversion, rinse, repeat. How many of these did we have? I don't remember. I've been doing it all day. After being long earlier. Yeah, good. Okay, so let's watch. Now, by the way, you guys, I'm going to mention to you guys that are hanging out in YouTube. First of all, thanks for visiting the Trader Lab. Appreciate you being here. Appreciate a thumbs up if you got something out of this today. Also, if you want to leave any comments below, if this is helpful, you know, um, that would be nice. It's always good to get a little pat on the back if I'm doing something that's constructive for you guys. Also, I want to invite you all to the Trader Lab in the Bookmap Discord chat. If you haven't come over there and visited, I think you might find it helpful to get a better understanding of this process and learning auction market theory and how to use these tools. And it's a mental situation too of understanding the market. If you don't understand, you got to start with, I believe, the foundation. And I didn't start this way because volume profile, market profile specifically, was not available until I think 1985, and that's when I learned it. When CBOT licensed it, and Peter Stottlemyre, who created market profile, which was time based because we didn't have volume at the time. That seminar I paid, and if you consider what over $1,000 was worth in 1985 or whatever it was, 80, what somewhere right in there, 86 maybe, and consider what $1,000 buys today. So it was big bucks for me back then. And then I couldn't do anything with it for about 2 years, actually a little longer. You'll find that exciting too. So sometimes you just have to let things gel. And what really happened for me was it took time and, also looking what some others were doing with it. And then I kind of went off on my own and started looking at the market a bit differently, I think, than others. And years ago, I was in a chat room. I've been in chat rooms with market profile traders. And I started talking to them about what I was seeing, these microstructures. And I got a lot of pushback. I mean, aggressive pushback. And I found it kind of strange because I thought they'd be interested in kind of seeing, what I was starting to observe. And, and there's setups that we discuss in the Trader Lab, which are now kind of, bread and butter, I guess you might call them, regular things we discuss that I was told, I shouldn't even be thinking about it, that I didn't know I was talking about. Well, they're not in the business anymore. So you just have to kind of prove things for yourself and be willing, I think, to go down a path. And I can't tell you, I have to tell you, there's so many dead ends I've been down that I can't remember them. I mean, anything you've probably thought of, I've probably done it. Not everything, of course, because I stopped looking a long time ago, and I decided I understand how the market works now. I just have to get better at it, you know. I do replays. I'm going to watch this stream this afternoon as soon as I'm done. If you're part of the Trader Lab, this is available to you to do a replay, and I think you guys in the lab over there in Bookmap, you should take a look at this. Also, if you have Bookmap, you can do replays on your own. So what I would suggest you do is you do a quick play through this replay this afternoon while it's available to all you guys in the Trader Lab in Bookmap Discord, and just note the areas. Do screenshots if you can. Just go to the areas fast, do whatever, and this weekend do replay of your data that you save, and slow it down. Look at the triggering structures. Try to look inside the behavior. Using the stop iceberg detector, try to see if you can observe the exhaustion. Try to see when you have a trigger and it pulls back to the micro high volume, is that an executable for you? How? You see, where? Think about that. And then you make a catalog of triggering structures. You'll note the liquidity up here in its behavior. You're going to draw boxes and circles and arrows and notations to yourself. That's what I did. I have binders and binders and binders. Maybe I'm a slow learner, but it's like Encyclopedia Britannica over here. And I can't tell you how much stuff I've thrown away. When I'm doing this stuff, trees are falling in the forest because of all the paper. Not to mention the ink. But that's what it takes until you kind of get and you find pieces that you can relate to mentally and then recognize and then develop the statistics and the courage to interact with the market. So this is our guy up here. Maybe he's going to get filled, right? Anyway, I hope you got something out of this. I got about 7 more minutes. If you're interested in the coming over to the Trader Lab and dropping in, there's 60 PDFs you can download in an introductory video that I did on our stream, about an hour, on auction market theory volume profile. There's loads of information out on the web. I think you can keep it simple. I found that our nature, because we're probably somewhat analytical as traders, is we want the minutia. The minutia is not necessary, in my opinion, to be a successful trader. It's a trade plan and the discipline to execute it. Minutia just gets you down the rabbit hole, and it doesn't help you, in my opinion. I've been there, done that. Let's look at this. And there's nothing here to do. This is over, But I hope you found it useful. If you're interested in visiting the Trader Lab, go to bookmap.com, join the Discord chat. Not only can you, be part of the Trader Lab, of course, and we'd love to see you there. Introduce yourself, let us know where you're from. You never know, you might have a trader in the backyard you can team up with, and you both can, kind of hold each other accountable and do better. Work together, leverage. That's what we do in the Trader Lab. Also, if you're part of the Bookmap Discord chat, there's loads of free education. If you're into stocks, crypto, options, you trade the Qs, the SPYs, whatever your thing is, there's something for you there, and you won't be solicited, and you don't have to be a Bookmap subscriber, to take advantage of it. So I would suggest that's something you might think about. So go to bookmap.com. Join the Discord chat. I'd love to see you in the Trader Lab. I do continue these streams during the day when I'm not streaming on YouTube. But today was the nature of the market I think we wanted to stay engaged. Okay. Any final questions or thoughts? Alina, the crypto is 7:30 Central Time. Go to the Bookmap chat. There's a schedule in there. You can kind of take a look at the schedule. Or just go to crypto. There's a room specifically for crypto and ask them what time it is. I don't do crypto. I kind of stay in the ES world as long as there's rotations and volatility. Otherwise, I'm in the NQ. And for the stream, I try to stay in the ES. Because the whole point of the stream is to just help traders get oriented and get a market understanding. You know, look where we went. Don't know what it means. So let's see. Now we're coming into the close, and you know, so we got a couple of minutes, and you know, it's going to get crazy. But let's watch. Let's see what it does. Samerson, there's no longs, no how, not now, not ever. I won't say never, but not today. Only shorts. And here's the key, guys. Where did we come? Not a trade, of course, but I want you to see the magic of the auction. Because if you understand the behavior, I think you are way ahead of the pack. And I have to say, past performance, not necessarily indicative of future results. This is a short. See? We never got above here, right? Remember the 70? That's where the trade fails. And so it can come back here, it can come down here, it can do nothing too. Or come back above here and take care of this guy, right? Don't know. Let's watch it. We'll just hang out a little bit more. Very interesting though, isn't it? So you can go to bookmap.com, join the Discord chat, come over to Trader Lab, download the PDFs, watch the video. Also, this recording is available to Bookmap Discord Trader Lab participants. I recommend, I'm going to put this link back in here in the Trader Lab for you guys. If I can get my hands on it. Come over here. Let's see if this works. So Bookmap Trader Labbers, I would suggest you grab this link to the YouTube recording and you watch it. There's a lot in here. Notice this this here, you see this? Let me show you this. This is an ignition algo. I just noticed it. You know, I'm watching my trading screen, so you have to excuse me. I'm kind of trying to multitask. It's not one of my best things. See this? This behavior is an ignition algo. You see it? It's coming down and it's putting pressure in the book. Notice how when this started coming down, watch. Interesting, huh?
ES, anomalous event.
What we got going on here? Impetus, my bookmap setup, I'm not sure what you're asking. This is very simple. It's just the session volume profile, limit order book. This I do manually. I put in levels. I have to do that. During the day, I put levels over here. This is the chart volume profile. It only shows me what's on the chart.
Anomalous event. 8, 7, 6, 5, 4, 3, 2, 1. Event has occurred. U.S. equity market is now closed.
So if you're trading the auction, you'd be right. This is where you would be. Right back here, rinse, repeat. Outside in, right? Now, I don't typically operate this late in the day, but this is your target. Let's see. Can you see a consistency of behavior and process? We'll give it a couple more minutes. I'll go to 3:15, and then my voice is kind of gone. I'm sorry about that. Hope you got something out of this. I thought it was kind of an interesting day. Yeah, you're welcome, guys. Labbers, Trader Lab participants, thanks for being patient with today. Yeah, Mike, thank you. Hey, Mike Miguel, thank you for posting all those your trade plan in the Trader Lab and showing us how it's done.
S&P sell ICE 555.
Yeah, Caliber 39, grab the link up there for the YouTube. It is exclusively available to Bookmap Discord Trader Lab participants. Take a look at it, replay it if you can do it. Notice this. This is Ignition Algo. Watch him. Let's go look at him. Okay. Let's get him going here. At this end of the day, this computer, this is my former trading computer, and it definitely is having a hard time. That's because the cache is really full, and we've had a lot of volatility, so a lot of ticks. It's processing a lot of stuff, you know. See this? This is a Ignition Algo. It's trying to push it down. So anyway, we'll see. I don't know if we're going to get here or not, you know, but that's a target.
S&P by stock 259.
And if we get below, in other words, if you can get below here, then we can come out the bottom or not, you know, and it doesn't matter. See, the thing about this is this would be the target down in here. The thing about the outcome of any trade is random. Now, it's the end of the day, right? I mean, but structurally, look what we did. See, this is the whole point of the auction. If you remove all the biases and all the chaos, there's a process at work of the purpose of, based on the purpose of, and the purpose of the market, which is to find a fair price. The auction is about where's too high. Remember? Oh, I'm not paying that. To where is fair here. And then it's about where's it on sale, and the participants think it's too low relative to retail. This is what's going on in all time frames. That's why if you can understand it, not that that means we can anything more, you know, it's like anything else in trading, it's maybe, but if you can kind of understand it, now it's not just noise. There's a reason. Now the market, you know, can do whatever it wants to do. It doesn't care about the auction really, because if something comes out and disrupts it, the market has to go to a different area and reprice. That's part of it too. You do remember we had a short up in here quite a while ago, right? From 85. Then we've been working from here down to here. You see, it's all structured. Setups or areas to observe can be structured. Then it's like waiting for the bus. And you have to have the discipline not to jump on any bus or to make a bus up when there's none there. You just have to wait for your trade. You know it's your trade because you did the work to vet it. And you know what the probabilities are of the market coming from here and getting to here versus going from here and going to there. And you know there's a probability. The other probability is, what is the probability of getting short and getting risk neutral versus taking the full stop first? If you know you have X%, and let's assume it's positive, okay, probability of getting risk neutral, which means the worst that can happen is you scratch, does that help you with your confidence and your patience? Think about it. If it does, now the worst that can happen is your broker sends you the gift basket at the end of the month. But you've protected your account and still had the opportunity to get the potential targets because your risk neutral has a positive expectancy, so you're buying the next trade, you see. This is how I think about it. And maybe you might want to think a little bit in that kind of, from that angle of what can you do to stay in the business, to pay for the trade, and you're going to take full stops. I mean, we all do. It's just cost of production. And detach yourself as best you can from needing to be right, but more of it needing to just follow your plan. Because that's how you measure right. Did you do, quote, the right thing, which means follow your plan. So you got to have a plan. To create a plan, you need an understanding of market mechanics. It's that simple, you know. So don't make this complicated. It's challenging enough for a lot of reasons, you know. But I don't think complexity reveals, it obscures. That's my 2 cents anyway. Yeah, Bert, you're welcome. Thanks for being here. You know, I'm just going to mention for the last time, because I don't know, you know, coming, going, you know, tourists, right? Go to bookmap.com, join the Discord Trader Lab, Discord chat, then go to the Trader Lab, take advantage of the downloads and the videos and all that other stuff that's there for you, and join a community of like-minded traders and leverage your collective experience. That's, I think, the key, is the leverage. I learned from you guys. You guys learned from me. This is the contract we have with each other. That's why it's the Trader Lab. It's not, I'm just there, you know. But I think I can offer you something that might save you some brain damage and or create new brain damage. But the point is, it'll help you maybe step back a little bit, because if you can understand why the market's doing what it does, how it does it, you might have, I think, a better chance to create a process that you can depend on and potentially execute and stay in the business and become a career trader, not just passing through. It's really a lot about understanding retail trader behavior, not acting like one. And since they are very predictable, think about something that has a high probability. If we know that over 90% of retail traders fail, is that an asset? Well, I think in statistics, and that's one of the most consistent statistics we have. Over 90%. Well, if over 90% are failing, then number one, I don't want to do what they do. That's the first thing. But number two, since they're so consistent, I want to use that behavior and understanding of that behavior that creates that failure rate as an asset for myself. And that's part of what we do also in the Trader Lab. We think like a retail trader. We don't want to act like one. Just think about that for a moment. So if you're a retail trader and you're not where you want to be, then maybe you want to start thinking differently and maybe doing something different. Make it your own. It's like that dance partner. Any of you ever dance? Some dance partners, you have a dance partner and it's smooth and it's like, you know, dancing on a cloud. Other dance partners, you need steel tip shoes. You know what I mean? So this is my dance partner, or music. And it can be, and it's not hard. It's logical. You just have to be a shopper. Think whether you're going to that convenience store 10 o'clock Saturday night for the pint of ice cream, or you're shopping in the big box store, which is our highest time frame. The process and the behavior is the same. It's just fractal. So once you get it, you got it. I don't have much thought on if we close under the June lows or not. I just don't think like that. I mean, I can have an opinion, but I really just trade with the participants. I'm being asked what do I think? Um, so I don't know. Creative, the introductory video, no, is all the way at the top. If you hit the pin at the top of the Discord Trader Lab, it'll take you to the top, and you'll see the PDFs you can download that show all these behaviors and setups. I think it might be a term, but I don't like to use that. And then there's a video pinned up there, which is kind of a foundation video. It's like an hour. And then, of course, you can watch this one that is going to be available to you guys in the Trader Lab, and that's just posted a little bit above. Mike, well, thank you, Mike, for doing that work and sharing it with us, showing how you're creating your trading plan. That's really cool. It's really wonderful. I'd like to have something like that. Mike, when you're done with your trading plan, send it here. I need one. As nice as yours, anyway. It's a beautiful thing. We should post that, an example of it, to the top. So, I think we should do that, Mike. Maybe just that cover sheet you posted yesterday that showed all the content. It's beautiful. It really is. So maybe we should throw it up there. If you're up for that, it's up to you. It's your thing. Okay. So have a good evening, guys. Watch this thing, today's stream. If you're interested, it'll be available till tomorrow. So you might want to watch it. I'm going to watch it. My wife makes me put on headphones because she's saying, "What are you talking about?" And she just sees all this stuff, So I figure that's fair, right? You're all welcome. I appreciate y'all coming here and visiting the Trader Lab. And I will see you guys all tomorrow, 11:30 Central. In the meantime, here's our process. Take a look at this, because this is what we've been doing all day, right here. Auction market theory. How does the market work? What's the process? And it's simple. It's what's too high, what's too low, what's retail. How do we see it? The volume profile is volume and price. Price in a vacuum is not the same unless you understand the volume. And that's pretty much what we're using to see retail trader behavior in all fractals or time frames. You guys call it time. I don't. Why? Time is not the point in the market. We created the clock. The market, other than open, close, and some time of day, is not on the clock. Context. That's the whole key to it. Trend down, mean reversion, outside in. If it was two-sided trade, we'd be trading it from two sides, different context. We started out two-sided trade, long side, I got short side, long side, short side, then we broke into a trend configuration, shorts only, context. The tool, Bookmap order flow tool, helps us see under the hood. Order flow, stops, icebergs, stop sweeps, absorption, there's much more than what I show you here, because there's many other tools that you can use to help you get down to that nanosecond level, or as close as you need to get to where the rubber meets the road. So you'll notice I use Bookmap, but it's all built on a chassis of this, because without understanding how the market works, I'm just going to be, this by itself for me in my time frame. Remember, I want the larger swings to make it pay. If I'm going to risk 3 points, I'm not trading for 3. I'm certainly not trading for 2. I'm trading for 10, 15, 20 when it's available, or I don't have a trade. It's that simple. That's what I do. Not saying it's what you should do, but this is how I put the pieces together. And it all ends up right here with Bookmap to help me see inside the microstructure and then get down to that granular level, which helps me execute and helps me manage my risk and get in better when I can and use a tighter stop so I can reduce my risk and also get my scale easier and closer. So does it pay for me? Well, it pays for me. And the only way you can find out is, come to the Trader Lab and watch and see what's going on, watch the streams and the videos. And can this help you cut your cost? Because if it gives you an edge, then it's a matter of cost of production. What does it cost me to have Bookmap, and does it net me a positive outcome? If yes, yeah, then I need it. If it doesn't, then no, I don't need it. It's that simple. But I have found if I can just knock a couple ticks off per trade, think about it. What is that over a month? It's huge. So it's cost effective for me. I can't say it will be for you, but I think common sense says maybe. That's all we got. Thanks for being here. Thanks for visiting the Trader Lab. I'll see you guys tomorrow.